Excel has a number of built-in functions that we will be using. Probably the most useful single function is the if statement that allows you to generate equations that determine what result will occur based upon decision criteria. The general form of the function is equal sign, if, open parentheses, logical test, comma, value if true, comma, value if false. The logical test is generally used with numerical values, but can also be used with text and other functions. If the logical test is true, when the calculation instructions or value placed following the first comma is executed, whereas if the logical test is false, the calculation instructions or value following the second comma is executed. The value, if true or false positions, can contain additional functions, including more if statements. Beginning with Excel 2003, the limitation of nested functions has been expanded to 64.
60.
The term levels refers to nested functions within sequential functions, but not the total. For instance, there could be 63 nested functions within the value of the if true portion of the if statement, as well as 63 nested functions within the value if false portion of the statement, and it would still work. Both.
That's your challenge. I want a 64 embedded if statement. Oh, you know the 64? That's what she said. They expanded it to 64. Oh God! Could you imagine even keeping track of what it was doing?
Both would be of the limit 64 of the original if statement if counted. As a practical matter, if you're going to use a lot of nested if functions, you probably want to separate them into subsets at some level. The reason due to the difficulty of editing the equations and following the logic when an equation becomes exceedingly long.
Well, the hardest part is how many parentheses to close.
No, yeah.
I lose count. And the color coding doesn't help me. It's just not helping. So I just keep closing parentheses until it finally lets me enter. Yeah, it's just, you really want to do it in segments. Or like we saw yesterday using the and or function.
Mm-hmm.
The and function can let you embed more arguments. That way it doesn't get so complicated in formula. No, I agree. 64. I don't know why they would have gone out. Did someone ask for 64? That's just crazy. Wow. All right, so I did. I see. I've already learned something. Good. All right.
Okay. Let's see. Well, we're going to be using these practice tabs on Excel.
Okay.
It says, within the data below, do the following. If the value of the if the value is greater than 40, insert a value in column, the value of 40 in column E. Otherwise, put in the original value. So the first thing would be setting it up here using equals if, open parentheses, if this value is greater than 40, then let it be 40. If not, let it be the original value. And then close parentheses, and then drag it down and see we only had three that were over the 4 that actually changed. Then okay. Then with the data below, do the following. If the value is greater than 40, insert the text NA with no quotations showing, just putting the NA. For not applicable, otherwise put in the original value. So with equal signs, IF, if T4 is greater than 40, comma, NA. If not, put in the original D4. We had two NAs. Okay. With the data below, do the following. If the value is less than 40, insert a value equal to 3 times the value minus 5.5. Otherwise, put in the original value. It's going to start off the same with IF, open parentheses, D4 greater than 40. If not, if true, it's going to be 3 times D4 5.5, and if false, put in D4. Okay. And so, yes, we got.
Unless you're what
What
they're doing, the logic makes, I understand it, so.
Yeah, I guess it was just to show that, because like within with like I think like sometimes you just think it's either like yes or no, like
Yeah.
A or B, and then that you can
Yeah,
actually
that's fine. You
do.
can do formulas, you can do text, that's good. Yeah, you can do it on dates. Yeah, they're showing you the if and what work is one thing. I do love the if date, that's a good function.
Yeah, it helped yesterday. Well, not yesterday. The other day they taught us for in derivatives we had to do like do with like date like trading days, and then like he's like you can't do. He's like it's gonna take you forever if you do it manually, and he showed us how to do it on Excel. That made it a lot easier.
Yeah, the date function, the struggle I've had is that sometimes you get different format from different sources.
Mhm.
So the way the months, days, so I've had to really work on any spreadsheet I use because I use a VLOOKUP, the line of dates, but if they're not in the same format, but yeah, if they're in the same format, boy, you can do some really powerful things with dates and logical functions and VLOOKUPs.
Okay. With the data below, do the following. If the date is smaller than January 1st, 2011, let the new date equal the same day and month, but 2 years later.
Not so challenging. Okay.
Otherwise, put in the X. Okay. This one's like a longer formula. IF. And
I
then
think of a couple ways to do it. I'm curious.
B4 is greater than 3. B4 plus 2.
Okay. That's a good way. I would not have done it that way, but that's better than the way I was going to do it. That makes sense. Okay. So it should say 415, and you just got to format it now.
Oh, yes.
Yeah. One other way you could do it. Yeah, that makes sense.
Like, what other way would you do it then?
Well, back in E, you can try this and see if it works. Go back to E, and where it says
Do I erase it all?
date B4 plus 2, just take that whole thing there. The whole date. Don't even use the word date. Everything inside that parentheses.
Oh, inside.
I mean, inside that comma, I'm sorry, everything inside that comma from the D all the way over. Keep going all the way. I'll keep going until you get to the B4.
Like that?
2 more, yeah, now, instead of that, click on B4. B4, yeah, plus 365.25.
365?
365.25. See if we get the exact same answer. So hit enter.
Oh yeah.
Copy it down. Let's just see.
I think this is the only one that.
Oh, not 365. I'm sorry. It's 2 years, right? So do sorry, go back and do it again. So do 730.5, excuse me. So nothing 360, 730.5.
Oh, that I feel like this one's easier. The other one requires to like putting in day. I think he was trying to teach us how to do the different functions.
I mean, your way is a little more accurate, but it's more takes more text. But I tend to use the 365.25 just because it's easier on the math. You know, you don't have to year and month separately. You just take the whole year and just add a year plus a fourth of a day. It'll get you a little bit off because if on leap year, you'll be the 14th instead of the 15th. So you know what this exercise is and what your way makes more sense. It gives you something far more accurate to what they're asking. All right, what that's interesting. Oh, wow, interesting.
With the data below, do the following. If the first letter of the name is W, replace it with V in column E. Otherwise, leave the name the same.
Okay.
So.
All it is.
Okay. Cool. Oh.
This line?
I don't know.
Yeah, this is a challenging one.
It was an exercise. I still sometimes some I have trouble. All of them I have trouble. What? Oh yeah. Oh no, hold on. What did I type in wrong? No, okay. This one.
I think -1 is gonna have to.
Oh, you're right. You're right.
Yeah, there you go.
There we go. Okay.
I have to explain the land.
Find what it meant. That's how I came.
So V plus right C4. Turns the number of characters in a text string. Oh, okay, that's a count function, right?
Yeah, that says identify the total number of digits, including spaces in the name.
Include spaces. Okay, is there one that doesn't include spaces? So you want V plus C4 right But if C4 has 5 letters in it, you only go right 4. Okay, that works for me. So it's going to do the ELPP because that's the 4 right. Wow, okay, I've never used the len before. That's really good. So len counts the number of letters. That's powerful. Okay, that's really useful. Yep, taught me 3 things today. That's good.
With the data below, if the value is greater than 60, then put 60. If it is between 40 and 60, put 45. Otherwise, the original value. Use nested if functions. F
You gotta use 64.
is C4 is greater than 60. Let it be 60. And if C4
Yeah, that's the problem.
is greater
All
than
right, so this is gonna be interesting.
40, let it be 45. 4.
That if it's between 40 and 60, use 45. No, on the first one that if it's greater than 60, it's not going to that one, so you ignore greater than 60. Greater than 40, that means you're going to use 45, otherwise you're going to use, okay. That'll work.
It looks like it, yeah. Like the
Where's one that's between 45? Okay, so Johnson and Johnson, that's the only one, I guess. Okay, that works. Yeah, that's a case where you got to make sure you do them in the right order. All right, that makes sense. But isn't there a function in there's a function in Excel that says between? I think you could use that too. But that makes sense. That's a cleaner way of doing it.
with the data below, do the following. If the value is between 30 and 60, then replace it with 45. Otherwise, use the original value. So it's F equal
Okay, I learned that yesterday.
if and D4 is greater than 30. D4
I'm actually going to use this function in some of our models. This is a lot more efficient. Using my class. So yeah, not only learn stuff, I'm actually use it. Johnson now. I don't know where they got that one. Yeah, 2010, Apple was worth $30.
Oh no, these are I changed the companies out just to have it like mixed up. Yeah. The other ones were it was just easier to find like a whole set of like companies because the other ones were
Yeah, I mean it's possible. All right, good. Yeah, I don't think alphabet was the line. Good, I understand that one. Yeah, the AN function, that's good. I learned it yesterday, but all right.
Okay, with the data below, do the following. If the value is outside 30 and 70, i.e. less than 30 or greater than 70, then keep the original value. Otherwise, replace it with 50. Use if or statements. Equal IF. Open D4. 4 is less than 30. 24 is greater than 70. 4 would it be 50?
All right, hello. I'm going to be going over the material sector today. So we, last class, looked at the model. We identified the different industries we had, paper products, metals, and chemicals. And I believe there's one more, fortunately, I don't know at the top of my head, I'm sorry. We're going to look at some of the resources today. I got familiar with the Bloomberg concepts. That was really cool. I liked how they had like these certification things. I think that'd be nice to work towards. But I know that we're gonna have to be doing some research. Fortunately, I don't know if there's anybody gonna be on my team, but what I plan on doing is let me see. Statistica, maybe.
Type industry research in your search.
Okay.
Natasha's, yeah, right there, Natasha's subparts.
Ms. Burns?
No, Natasha, I can't say her last name. Her picture's right down there.
Oh, okay. I thought you meant the professor.
No, it's, yeah, it's a really good site.
Cool. Yeah. So I know we're going to be using Market Line, Statistica, Cap IQ. I know we use in the finance class, the principles class. That shows a lot of good data on the income sheet and balance statement side for all the companies. Here's actually some things here. So Market Line, I remember we looking at the Porter's 5. I'll go ahead and I'll pull that up. We also got access to the following IPCs. So I'll type in, I don't know, chemicals.
Is a good place to start. You can, if you go over in geography, you can actually limit it down. If you want to.
Yeah, probably North America.
Yeah.
Short zones.
Yeah, there you go. United States chemicals.
Oh, okay.
Some really good charts that you can just copy paste into your papers.
So can you touch more on the papers aspect?
Like on screen analysis or any class where you need some charts.
Mm-hmm.
They should give you some pretty industry standard ones, so you'll see some charts you might not have thought of doing. So if you go down, you just have to get past the input part. Yeah, like growth and revenues. Pretty volatile. Well, I don't know why it's so old. 2019.
Yeah.
But, it's 50 years old. Put it in there, yeah. They give you the breakout, specialty agriculture, so the bulk of it is commodity chemicals. Yeah, who's using it? It looks like
Wow.
kind of effect there.
Chinese
Some
markets.
forecasts there. It looks like COVID's in there because they're forecasting a negative too. So they probably did this during 2020.
Mm-hmm.
And then you get the Porter stuff. I don't know if you've ever done a Porter's analysis.
Yes.
But,
I haven't created this chart though.
I don't like that chart FX because it's not very well defined. I don't like weak and strong because by strong, I mean buyer power is strong, which means that's weak for the industry. And so what I do like in secure analysis is don't say weak and strong, say positive for industry, negative for industry. That way, you know, the strong applies it applies to industry. So in there where the number's higher, that's bad. Strong is bad for industry. If it's weak, it's good for industry. So supplier power is an issue, degree of rivalry is an issue, substitute's not an issue, which kind of makes sense. You can't really
Substitutes.
substitute for chemicals too much.
Yeah, that would take a lot of research.
They're pretty standard what they do. They go limit into it too much, so I don't think you should ever go to this level of detail, but I would read through them.
Okay.
Because I'm like, you see like buyer independence, it's like, what do I mean by that? But this is just, way too detailed. Same thing with supply, it was going to such a detail. But it does give you ideas what to think about.
Some more numbers. I don't see any forecasts. Do you think I should try to look for like a more update? I mean, obviously we could use this PDF, but I mean.
Yeah, I think that we have 2020 by now.
Let me.
What's the date of the report itself? Let's go back.
July 2020 or June.
So, yeah, that's too old. I mean, that's part of the issue is it's just, they don't update these all the time.
Mhm.
That would almost be a useless report at this point, given what's happened. Well, it doesn't have the supply chain disruptions and all that. Paints and coatings.
Go back.
No, it's on up at the top. Up higher. Just your fake years.
I accidentally closed the other
Oh,
one.
you'll be going.
Yeah.
Yeah, so market lines are really good one. You can do the industry, you can also do companies. So when you click on analysis, bring that arrow down above.
Analysis. Industry.
Company analysis. Next one down. So there's where you do the industry analysis, but company analysis. Go back to the left. Company analysis.
Okay. Company profiles.
Yeah.
I know we were talking about Louisiana Pacific on the last one.
If you got one in mind, you can just type that over.
Oh, why is that like it's not. There was one called Cheetah. That one caught my eye. Was I?
If you know the ticker, you can use the ticker.
Unfortunately, I do not. Aha, here we go. Thank you. I appreciate that. Fortunately not. Oh, here we go.
Doesn't look like they have a report. You can try.
2021.
Click on the SWOT analysis. That's the one thing I find the most helpful. So over on the right, down below in the purple.
Oh.
SWOT analysis. You can get a lot out of a SWOT analysis about the company. Client base, robust manufacturing footprint, improved financial performance. They give you some really good ideas.
Geographic concerns.
In fact, in the CFA research challenge that Waylon was in, that's one of the questions. I think another team got it. So no, I think they got it. What's their competitive advantage? And for their company, they gave a really good answer that it's their engineers, it's their knowledge base.
Mm-hmm.
So get those things from a SWOT analysis and have it ready. And you can see how this is really powerful in your capstone class, upper level finance classes. There's just so much stuff here.
Okay, cool. Is there anything else that you recommend looking at on Market Line maybe?
There's so much stuff there. A lot of it on the data is you're probably better off with Capital IQ.
Okay.
But the porters is really important, the SWOT's really important, and just understanding the industry. Students that rely a little bit too much on Market Line. So when they turn their paper in, it's the plagiarism check is like it's all Market Line stuff. Put it to your own words. So I see it more as to give you ideas, to do your own research versus just don't use their SWOT, come up with wrong, but they'll give you some ideas to think about.
Okay. Then we have Statistica. That one's another great modeling. I want to say
It's on there.
can you just do
You can
Like-
even just try anything random, materials, chemicals.
chemicals?
Industry.
Would I need to narrow down my search to United States
No,
or
I would just do chemicals.
okay?
And hit enter. I don't know if I put in. Over on the side, you can limit your search. You have to just look and see if there's any of those things. It's the problem with statistics, there's so much. You might get 20 reports and there's only one of them that's of any interest to you. Most of them were X, outlook. There you have an actual forecast, but then whose forecast is it? So it says the data is shown using current exchange rates to apply most recent update. But it doesn't tell you whose forecast it is. And it's hard to use a forecast if you don't know who built it. And why did I have it coming down from 672 down to 542?
Okay.
That's a pretty big drop.
Yeah.
Forecast global comparison. Yeah, dominates.
Yeah.
See Germany because they get the auto manufacturing. I guess South Korea has auto manufacturing too.
Is that Hyundai?
Yeah,
They got a lot.
And then they got another.
I know Lexus is Japan.
Huh?
Lexus is Japan. That was up there as well.
Yeah, and Toyota. Yeah. So here they're saying, key statistics, so that can give you some ideas on the charts you can do. But yeah, I like Statista. I let students get away using Statista without double checking the data, just trust it. But there could be errors in the data. In fact, we saw one the other day. It was showing the major players. It's supposed to be in billions, but on one company they forgot to divide, and so it was supposed to be like 800 billion, and it was actually shown as 800 trillion. So that company was so big, and everything else didn't show up. You'd have to, but you can dump it to Excel, and you can fix things like that. You
Yeah.
just divide by 1,000. So you have to look at the data and make sure there's not an error in it.
Try metals.
Metals, yeah, quite a bit on metals. Metal industry, you might try that one. In fact, your basic metals.
I kind of took away all the stats. Industry outlook. Do you know what I did wrong? Or is that just like the amount of
That may be all there is. Don't be that many industry outlooks. Click on the very top button, the Statista one.
oh, this one?
No, back on the other one.
This?
Just click the very top on the left. Just click on the Statista.
Okay.
Yeah, I don't know why. You've created a filtered view. You may see less.
Do I need to apply it? I feel like I did.
You might just come back into Statista and start over.
Okay.
Statista it's got a lot of stuff, but you gotta do a lot of looking through unimportant stuff to find what you want. So you might try, instead of metals, try metals industry. Here you go, mining industry in the US, that's a good one. Our PDF, I don't know how many pages, the value added by mining, US mining industry capacity utilization, that'd be. Yeah, so there you get an entire report. I don't know how many pages it is, but 80 pages. I mean, you're doing a paper on mining 80 pages for someone who hopefully knows what they're talking about. That's pretty powerful.
So sourcing something like this, it just has like Statista, and I know you were talking about.
You'd have to look, I don't mind students saying Statista's the source, but if Statista tells you another source, you want it as far as you can get it right to the actual source. Because I mean, if it's an industry trade group versus a governmental body, you got to worry about biases. Government data is going to be more reliable than an industry trade group that's trying to promote your industry. That can be important. If all you have is Statista, then you say Statista and you hope it's accurate numbers.
Okay. And then we did. Should I move on to Cap IQ?
Yeah. You might have trouble getting into it, but
I think we might actually. I think I have it automatically, like the password automatically saved on my laptop and is like randomized.
I'm not going to get into it if you can. So I'll see. So I'm gonna try it. I can get it into it on that machine, but I got to do it.
The TV's still not working?
No, but you can log in. Yeah.
Yeah.
You can just log into the Zoom. He's been completely ignoring my emails. So yeah, I got it in here. You get it.
I'll go ahead and yeah, how do I? I could stop sharing this one and then
Yeah.
you can, and then just allow me access, or if you just want to show me, whichever you can.
Yeah, can you see it?
I can.
What company are you doing? I can't spell it.
Oh, Louisiana.
Louise.
Yes, sir.
But you can see all the stuff, key stats, ratios, auditors, data sheet, corporate timeline. There's just so much. Board members with an income statement. It goes all back to 1990. And you can download the whole thing. Just by clicking download financials to Excel. Pretty amazing stuff. And then sometimes you can click and get more detail. Income statement on revenue. They don't give you much here. Segments. Specific. Oh, there's the segments. Siding, Oriental strand, Bolton, look how detailed that is.
Yeah.
Industrial panel products. And all of that can be dumped into Excel, so you got at your fingertips just a whole lot of information. And Anthony's teaching the Capital IQ class, and have something that's real similar to Bloomberg, where you have the account functions, and hopefully the next few of his classes it'll show us how we can actually bring in this data, not just from this company, but from multiple companies. That would be pretty helpful. Yeah, good.
Yes, sir.
All right, so up here it says Bloomberg Market Concepts. You see that? Click on that. You come down to equities. It's equity research. looks like a lot of videos, but they're usually only 1 or 2 minutes long. But if you come down, it says Rolls Royce case study. Really just a matter of just clicking on that and just see, they show you here's Rolls Royce and other competitors. There's Rolls Royce and their customers. Talks about, you know, how you can get to different charts. So you wouldn't do exactly what you're doing here because it's a different industry, but you find something comparable. Like relative, and here, Bloomberg intelligence, how you use Bloomberg intelligence, and see how he's clicking you around, all that stuff.
That's a lot of knowledge, a lot of information.
Yes, so historical analysis shows you how to do that, you know, so really it's just going through what they do here. If you did this entire thing, it'd probably take you about an hour to get through this entire thing. If you have time to do the entire thing, I would recommend that because you know you get it checked off the list. If you're going to do the market concepts, so go ahead and start with this one because this.
Yeah, I'm gonna put it in the weekend for sure.
Now the other thing they have, which is real similar, is on their portfolio management. They have something called build an equity portfolio and generate ideas for portfolio. Those two can be really valuable as well. The other ones aren't, but 2 and 3 have some stuff in them that's pretty good as well. Those are ones, if you have time, that's probably about 3 hours worth of videos. All of them, but there's a lot of good stuff in there. There's some overlap that you'll see the same thing over and again.
And the last one was equity analysis, correct?
Yeah, equity analysis, equity research, I think. Actually.
Okay, research.
It's under equity. But under equities and equity research.
Okay.
Yeah. So I think beyond just getting the market concepts down, getting the certification to actually specifically do what they're doing, you're just going to stick in your memory a lot better. Interview, you'll be able to talk to it a lot better.
Mm-hmm.
Yeah, good. All right.
Awesome. I think that is me for the day.
So I just kind of wanted to jump into sort of like some vocabulary today, at least so that like, you know, we can like sound like we may know a little bit about real estate. The first sort of concepts I want to hit are like the major food groups, right? You've heard that term before, the food groups. You guys know the 4 food groups?
Not since a long time ago.
Yes. Okay, yeah, no worries. Do you know?
Carbs, proteins.
There you go. He almost has. I'm talking about real estate food groups, right? It's what we call it. Yeah, no, it's kind of funny, but it's referring to our asset classes, right? So you know, you don't like walk around in the office and be like, "Hey, what asset class are you working on, dude?" You know, sound kind of neaky, right? We just go around like, "Hey, what group are you in?" And you know, they're either gonna say, "I'm in office, retail, industrial, or what are this?" So I'll go ahead and write those down. Do you guys have any idea like the risk or the risk profile on each of those? You guys would have any of them.
Just as a farm. Well, actually,
In commercial, we didn't even talk about asset quality.
everything I think I know is probably not.
Yeah, let me write it down right quick. And
Include hotels and retail.
sort of, I guess that's, yeah, I don't even know. I guess that's like hospitality, but I don't know. It's not even, that's not one of the main 4, right? There's also like healthcare, there's like life science, like Professor Sweet said, like hotels. Like, I mean, well, life science is like, okay, life science is technically like an office asset. Because, yeah, whenever I was working, because I was part of the office team this last summer. And that's considered, yeah, like life science is like under office technically. I don't know. It's like it's just going to be whatever the firm decides it goes under, right? I mean, I think like some firms have like a dedicated life science arm. Some firms have their own, healthcare arm. Some companies only do those, right? There's like one guy that broke off from, my company this last summer. He just went out and started his own life science real estate firm. That's like all he does. If you've heard of a company called Health Peak, all they do is invest in healthcare real estate, hospitals, that bunch. So it's like it varies. Nothing's ever set in stone in real estate. We're not as uptight as investment bankers. Right. Okay. So to talk about like the risk profile, right? Would you have like any guess whatsoever, like which of the 4 main food groups, right, is like the most risky? Actually, let's start with the least risky. Cheating. Yes, it's industrial, and I guess the sort of reason for that is well, one, most of the time you only have like a single tenant, right? So it's like your tenant turnover it's not heavy, right? If you're like thinking about like something like multifamily, for example, like what does the lease expire in, like a year? Like they could be living there a year. They couldn't, they could be moving on. It's not as set in stone, right? So industrial, is probably the least risky for that reason. It's only one tenant. Another like benefit there is like you don't need to make the space really pretty. So it's like you're saving on a lot of like interior expenses, right? It's like the machinery is theirs, right? They're not going to include that in TIs necessarily. It's going to be like, I don't know if we're talking about, I don't know, like a printing company, they own the printers, right? The printers aren't part of the real estate, it's theirs. And that's all going into this facility, and it's a warehouse, right? Like I said, it's not pretty on the inside. I'm sure they may have AC, not to make it a sweatshop, but like other than that, like it's not, too crazy of a, asset to manage. Next up is probably, I mean, between multifamily and office. What do you do? I'd say multifamily. Sort of. So the reason for multifamily being, relatively less risky, right, is just the idea that nobody's not going to pay rent. And it's sort of just like maybe like one of your 3 main expenses in life, right? It's like, okay, groceries, you need groceries to live. Food. There you go. Yeah, food, water, and like shelter, right? So nobody's really happy with getting kicked out of their apartment complex. So that's pretty much that makes it a pretty risk averse asset. That said, you do have your turnover. That time in between tenants, like obviously you're losing money. You're gonna have to find maybe if it gets difficult, you find a broker to help lease out the space, or even like a leasing department to lease out the space, but you have to pay them. So that's a whole expense you need to keep into consideration. So that's multifamily there. Next is office, right? Now the risk with office, it comes from the business, right? Typically, whenever you're starting to lease out the space, the first thing you're going to check is, how viable is their business, right? Do I expect them, to be around, for the term of their lease? If we're talking about, throw a business at me. Who needs an office? Like a tech firm, right? Let's just say they started this trendy new app, and it's probably making some ad revenue right now, but 5 years from now, will it be trendy? I don't know. And for that reason, their 5-year lease term, may not be the safest place to put them, right? I may give them like a 1 or 2 year lease. They can, re-sign after that. But that's pretty much where the risk is coming from. It's like, how strong is the business? Now, of course, if you have like a Microsoft in there, that's considered, that's like, AAA tenant, they're gonna pay, right? Do you guys have like any idea like who's the safest office tenant? It's like a pretty easy answer. Don't cheat. What's that? The government, exactly. The government will never default, right? Yeah, exactly. So from a valuation perspective, right? If you have a government tenant, in your building, like you're rock solid, right? That the value of the building is going to be higher than any other tenant. For that reason, we know it's a certainty in cash flows. We don't have to adjust for any risk there.
It causes some major headaches in USA because you have the government as a tenant, there's all these discrimination rules. You have to follow.
Oh, there you go. Yeah, I guess there's probably a lot of paperwork.
Yeah, the tenant's
Yeah.
safe, but their paperwork is.
There you go. There's your trade-off. There's your trade-off. But then again, you get a tenant like Microsoft is probably up there too. No one's gonna move out on you. When I did mention life science assets, right? Life science assets. Earlier before, this is sort of like right in there in office if you want to consider it that, right? So a common strategy nowadays with these office buildings, and especially during COVID, this is a trend. Definitely write this down. If you're in an interview, they want to know if you're like well versed in real estate. They're going to ask you like, where might you invest? Or what's like a trend you see nowadays? You're going to see, well, life science assets is sort of like that new push, especially with COVID. Whenever these offices started, becoming vacant, whenever we no longer needed the space, a lot of these major real estate companies were going in and converting their spaces into like life science assets. So that includes like pharmaceutical companies, that includes like labs. Anything related to like, sort of like not healthcare, but like more on the science side. I don't know. I'm not in the science squad. I wouldn't know exactly what that looks like. But the benefit with that is these tend to be like really large companies, and these labs need a lot of space, right? So there's like, it's almost going to be treated like an industrial asset in the sense that you're not going to have the turnover. It's going to be very suited to one tenant, and your cash flows are going to be very centered around this one tenant. So the whole idea here with the strategy is you get a single tenant life science asset, and that's like your returns are ridiculous because these companies, they're growing extremely fast. A lot of the business has to do with getting like a new drug passed by the government, or having a new piece of technology in its next phase. It does pay out a lot. That research, even though it doesn't produce any cash flows itself, the product that they are researching in the end is what's paying out. A lot of the times if you do your research, you get a good tenant in there, that can be honestly like probably your highest return on any of the assets right now. That's sort of a new trend. Some people will argue that the life science market is a bit saturated right now because the sort of wave came in. It was kind of like the new way. It was the NFT of the markets. It was like the new pretty thing that a lot of people were making money on. So the returns started shrinking just a tad. But it's still something that you could probably bring up in interviews, something that makes you sound like you're versed in the industry. That brings me to our last asset, right, which is retail. Right. If you have any idea why retail is risky, it's not a complicated answer either. Kind of gave it to you. Exactly, right. And what was it like? Most businesses that fail are either going to be restaurants or stores, right? Like I don't know what the statistic is, but like how many fail a year? More than we can count for sure. So that makes retail, its own beast. That said, the perk is that you can charge these tenants what's called a percentage rent. You ever heard that before? Percentage rent, yeah, I'm sure you've heard it in your class, right? Where you're charging them, a percentage of their sales, right? So on the flip side, of course they can be failing, making no sales, but you're incentivized to help them, bring in customers, boost their sales, because that's going to be reflected in that percentage rent. You're going to end up making more money, with good tenants in there. And of course, like there's strategies you can execute. If I'm approached by, let's just say, an ice cream shop, and they want a place in one of my retail centers, where might I put them? Am I going to put them next to where my laundromat is? Am I going to put them next to an arcade? Am I going to put them next to a restaurant? A restaurant may be a good idea, right? It's sort of a natural behavior. We eat dinner, we go get dessert. You put those next to each other. That's your incentive to boost their sales, right? That's how we're executing the strategy and make more money on our end. Is everyone in the Zoom call catching up, making sense? Sorry. Yeah, I knocked it over, didn't I? Yeah, there we go. Everything's making sense. you guys still hear me?
Yeah, we can hear you.
Okay, awesome. If you have any questions, just put it in the chat and I'll get to it eventually. So those are the food groups, right? That's sort of like the major like basis of real estate and commercial real estate investment in general. You know, once you break a certain threshold as far as capital goes, you want to start talking about these food groups here. All right, we'll move on. Okay, so now that we got that down, let me go ahead and mention sort of the investment process here, right? We're investing in these assets. You're going to always like start off right with either a broker or an investment sales agent. You know, they may come from your big firms like CBRE or JLL. You know, they're going to approach you as an acquisitions analyst. Just pretend we're acquisitions analysts right now. They're going to say, hey, you know, I came across this opportunity that your firm may be able to invest in. You know, here's the property X, Y, and Z. They could say it's a 200,000 square foot retail center. You know, I know your firm's looking to balance out with a retail asset. You know, here's the pro forma. Here's the memo. Here's the rundown. That's sort of how the whole process begins, right? Your approach with the deal. On the asset management side, we don't go chase deals. You know, like, of course, like we may be socializing and somebody mentions it, you know, at an outing. You maybe invest in that. But most of the time, like we pay brokers to take care of that kind of information, right? It's not our job. You know, they get paid a commission for that. They get referrals and, you know. So after that, right, you're going to start running your investment, right? And, you know, some of the first things you need to check up on are, you know, does this make sense in the portfolio, right? Let's just say I have, I don't know, 2 multifamily assets. I got 2 retail centers. I have 3 offices and I have 4 industrials. If someone approaches me with an industrial deal, you know, off the bat, I should already know it's probably not smart. Why am I going to take on a 5th industrial deal that just like, it really messes up the balance of the portfolio, right? So that's like one of the first strikes, you know, that, okay, deal's off the table, get out of here. Some other things may be, you know, does it make sense as far as returns go? Does the project make sense as far as returns go? Okay, they may say, you know, we have this multifamily complex, right? The catch is that, you know, you need to develop it a bit. You know, the buildings are run down. You know, you maybe need to add a new office, you know, in the center of it. There may be a project involved, right? It may change up returns and you should be making more for the more work, right? But, you know, let's just say your portfolio manager says, no, like we already have 2 developments in the work right now. We can't afford to do a 3rd one. Yes, it may boost returns, but again, it doesn't make sense for our portfolio. The whole idea here is it's just like diversification, right? Like, am I going to go all in on tech stocks? You know, exactly. It does, like, okay, you know, maybe if that's what you're chasing, you know, maybe if that's what you're focused on, but, you know, just like good investment principle is just diversifying, you know. So that's something else they may ask you in an interview. You know, they'll say, you know, they hit you with what's called the $100 million question, right? I'm not talking about like what's that show called? I Want to Be a Millionaire. What's it? Do you want to be a millionaire? Exactly. No, not exactly that. But you know, they're going to ask you in the interview. They're going to say, if I gave you $100 million right now, what would you do with it? The common answer is, well, and I don't know, right? To work around that, right? You know, you'll talk about one of these food groups, right? You'll say, okay, well, right now, I just heard Drew say, life science assets are kind of where to go, but I'm not going to put all my 100 million in there, right? I'm going to diversify. I may do that life science single tenant asset, but you know, to balance it out, I may put, you know, the rest in retail. Really balance it out. Make yourself sound like you're not just like taking money and running, right? Something to keep in mind. Hey, I know you just lost it. If you want to jump in this Zoom call, you can sort of like see the screen and
Okay.
It's more just because I have the Google Drive folder in there. If you could just, once you get into the Google Drive, there's an Excel doc. If you could just sort of like sign in, it's just asking for your name and email. Yeah. Awesome. Okay, so we're just running through the deal. Yeah, so I was just mentioning, so these are like the major food groups here as far as like the asset classes go. All food groups. And then I'm just talking about how, the deal progresses.
We're talking a little bit about interviews and,
That's, I'm just like throwing it out there, like if you're in an interview, like this is how you may want to approach the answer to the question. Okay, so where was I? Okay, so we're given this deal. All right, it makes sense, fits in the portfolio. The next thing we need to pay attention to is the mandate. The mandate is sort of what, forms the requirements for our portfolio, right? So like I said, it's a good idea just in general to invest, with diversification. You're investing, you're following return patterns. You're as far as projects go, you're keeping, diverse strategies. But you also need to pay attention to the mandate. The mandate is essentially what the investors want, right? Whenever the investors sign on their money, that's called the mandate, right? It's just the contract they sign, establishing what they expect from the investments, and as far as returns go, as far as where they want to see their assets. You may have a fund that's made up of, let's just say, 5 mandates, and of those 5 mandates, they may be saying, we want predominantly industrial assets. We are a risk-averse portfolio. We're risk-averse investors. We're going to be looking for smaller returns in the long run, but safer cash flows in the short run. Okay, well, we can balance it with industrial properties now. So that's another thing you have to consider. All right. So these are all considerations, right? We haven't even started the deal yet. We haven't even started running the deal, right? So then we get into our first professional. The first professional here is our acquisitions analyst. He or she will be the one that runs the investment, right?
Sorry, I won't know.
Okay, yeah, no worries. They work. Okay, yeah. Okay, so the acquisitions analyst. So this is time 0 in the investment, right? If you think about a timeline here of the whole investment process, the whole life of the investment, right? Time 0 is acquisition, right? You're going to hand it off to an asset manager who will take care of it for the life of the investment. But at time 0, at acquisition, you need an acquisitions analyst to take care of that part of the deal, or really to take care of the deal in general. Asset managers don't really mess with the deal; they're just executing a strategy. Right? The acquisitions analysts, they're going to go through the underwriting, right? They're going to make sure, okay, well, we know conceptually it makes sense. We got the right food group, we got the right risk profile, we have the right returns, but now does it make sense in the Excel doc, right? They're the ones running the model. They're the ones staying up, 12 hours a day, working in the office to make sure that we're actually making money from the deal in a hypothetical setting, right? It works in theory here on your Excel doc, right? So yeah, like I said, that kind of looks like it's just a model, right? I mean, you guys saw it in the folder. You saw the simple acquisition. It looks something like that. There's a lot of other steps involved. They have to be very well versed in contracts. You got to be able to read those contracts and make sure, well, 1, you're following the law, and 2, you're getting what you want. You're not getting swindled by the other party. It happens, right? We're talking about a lot of money here, and once all that is said and done, right, you're going to bring it to your first investment committee. Sometimes it is called a real estate review, and this is where you're going to pitch the deal, right, to a committee. And not only are you going to be versed in the property, not only are you going to be confident in the property, but you need to sell that investment to your committee, to your superiors, right? If you're thinking about, doing this like in your own setting, I think you mentioned here, this is like bringing the deal to your dad, right? Yeah. Back in your early days, this is bringing your deal to your dad and saying, does this make sense? Is this? It looks right to me. but does it look right to you? It sounds like it's a pitch, like they could say yes or no, but like most of the time, like these are people in your office, like you know them, you're showing them the deal, like they're if you make it to the review, like they're gonna say yes, right? After the review, then you could really start going to other parties and start looking at the financing, you know, how you may be paying for the property, you know, the escrow, the title, all those other things to actually start, you know, finishing out this deal, right? And then after you go to these parties, and everything makes sense, not only to you and your team, but to the other third parties here, and with their numbers and however that financing works, and you get, you know, their return, you please them, you know, they're happy with everything. The deal makes sense. You take it to the real investment committee. Right? This is sort of like a legal formality. Is whenever you're making a large investment, right? You need to be able to propose this information to multiple professionals. You know, this is sort of like a company-wide, you know, a company-wide event. Right? Everyone that's, you know, in acquisitions and even asset management, portfolio management is going to be there in this room, you know, however it is, or a Zoom call. You know, this will be like a 50-person meeting, and they're going to end up, you're going to present it to all of them. And everyone basically needs to have a good opinion. I'm not saying everyone needs to agree, right? Some people may say don't do it at all. But if the superiors agree at that point, you start considering the bid, right? And this is when you're talking to, well, you should have already been talking to your asset managers, making sure that they're ready to execute that strategy. But then you're talking to the portfolio managers, and you're making sure that the bid that you're about to submit makes sense for, you know, their portfolio, right? Let's just say, you know, you did your underwriting, you ran your analysis, and the property, you know, comes out to a worth, let's just say, of $98 million on paper, right? Obviously, you're not going to get $98 million. It's a negotiation, right? You can't just like throw your number out there, you know, maybe low. You could start with that bid, you know, but the seller may not approve of it, right? And you have to also consider that other people may be after this property as well. It may fit in their portfolio. So the whole dilemma here is how low can we go, right, as far as the bid goes, to where it makes sense for us, but that we're also stepping on all the other bids. Right? I mean, you need to win, right? You just put in all these hours of work, right? You want to put out a good bid and get the deal, because obviously the work doesn't pay off unless, you know, you reach your returns in your investment. And this is where it gets a bit, you know, it gets a bit tedious, because most of the time you fail, right? It's like most of the time, like the hit ratio on deals like this is like 1 in 10. So you think about, like, as an acquisitions analyst, like 90% of your work goes in the trash. That hurts. It hurts. And they put in a lot of hours. You got to think like a per hour basis. Like, let's just say they worked 10 hours that day. They only took home 1 hour of work, right? It stings. It stings. That's why they get paid the most. out of the three roles, that's why they get paid. It doesn't mean that they're doing the hardest work. It just means they're putting a lot of time and effort into like a very like short span of time, right? All right, so let's just say, you know, we're being optimistic here. We close the deal, right? It happened somehow. You know, it really does feel like a miracle whenever it happens. You know, 1 in 10 is not likely, but of course, you know, it happens. It's how real estate firms operate. You close the deal. The acquisition analyst handed off. And okay, you just went through this entire long process, and you're not making any money yet, because now you need the asset managers to execute the strategy, right? These are the people that are going to be leasing out the empty spaces, right? They're going to be the people that are considering your CapEx projects. These are going to be the people replacing, you know, anything that needs to be repainting, any costs that need to be associated with the property. Asset managers take over. You know, you remember in some of our other classes, they may be, you know, replacing the lights with energy efficient bulbs, maybe putting in, you know, different sorts of HVAC systems to, you know, maximize efficiency, lower your costs. That's the whole job with these asset managers, is that they're taking in these concepts, you know, profit maximization and cost cutting, right? And they're quantifying it in Excel docs, right? So those models, the models that the asset managers are doing, this pure optimization, right? That on top of leasing, and of course, like the brokers take care of like the front end of leasing. Okay, so we made it through. So that is the life of the deal, up until we own the property, right? Of course, there's disposition, which a disposition analyst does. That maybe like a portfolio manager takes care of that, but like obviously like to like boost the IRR, right? It's like there's an exit value. That exit value you have to boost, and it's like you're now on the opposite end of what the acquisitions analyst is doing. Right, except like now you don't really need to run as much analysis because it's already been done. You just need to get rid of the property for the highest price possible, right? It's not, yeah, it's less of a question. It's more of just, how high can we bump this up to? And that's going to be like totally dependent on, what the asset managers have done over the life of the project, right? If they slacked off and they really didn't replace anything, all right, well, you may have some appreciation, in the sale price, but at the end of the day, like you didn't really like add any value to the property, right? It just kind of took over itself. And if you're thinking about like a bad asset manager here, they may have like really done nothing with the property and it only depreciated, and now you didn't make any money. So it's like everything's like very contingent on performance here. Okay, so of course, the most important part is that we're collecting rent. Right? You talk to your property manager about that. They should be on top of it. That's essentially how we're meeting our returns. We're collecting rent. Okay, that's the deal. That's the whole deal right there. I just walked through it. Are there any questions before I move forward? I know that's a lot of information, like really fast, and it doesn't really make sense, on a whiteboard. Because like this is like a real experience. It's like a real life event, and you have to like go through it to understand it entirely. And I haven't even had that experience to like run through an entire deal. These things take like a year, like maybe 6 months, 8 months, yeah, a year. It's like that's not out of the ordinary. So are we good? We got a basic understanding. All right, awesome. So those are the general functions. I didn't really touch on portfolio managers. These are the guys that are they're balancing the portfolio. They're probably talking to the investors, securing mandates, securing funding. It's not as close to the real estate as the other two roles, but it's still pretty important because, well, if we can't raise money, then we can't invest either. Right? Okay. So that, yeah, like I said, that's the deal. That's the chunk of our class today. I hope that was pretty good. I was going to start touching into, just like a few, of the numbers. We're going to go over this again next week. That's kind of my hope, is to touch on the pro forma next week, and of course, like how we value buildings in a loose sense. But I hope everyone here knows about a cap rate, right? Right. Awesome. I said it last week. So if you forgot, that's on you. No, right? Just a quick refresher. NOI over value. Not that complicated of a formula. We all know how to divide. It's there. The whole idea behind the cap rate is, well, how do we value like one building to the next, right? Like you may have a $5 million property. You may have a $500 million property. Those may be the only two properties in town. How are you going to value like two like very separate dollar amounts? It's you turned it into a ratio. It's like how much money is it providing to how much it's worth. Equalizes things and kind of like proportions everything out. Yeah, and this is like very like centered around the acquisition. So it's like when you're purchasing, right? Whenever you're thinking about, let's just say like from an asset manager's perspective, you need to lease the property, right? Let's just say you just got staffed on this building, nothing, right? You're starting the research. Obviously, whenever you're coming up with, a fair rent, you need to look at other buildings in the area. Right? If you overprice it, nobody's going to come in. If you're underpricing, you're cutting yourself short. So another metric, very similar to cap rate, would be like lease per square foot over value. It does the same exact thing. It makes like the proportion straight. Like, of course, a nicer building that's worth more is going to have higher rents, but to account for that, on a cheaper building that has cheaper rents, like, how do we know we're staying proportional? Same exact concept, right? So it's not called it's not called a cap rate. I guess it would just be like a lease analysis ratio. Like, it's not. You just, whenever you're doing like a comp analysis is what it's called. You can either be doing it from the transaction point of view or from the leasing point of view, and the formula is still going to be the same. It's just either going to be, looking at price per square foot over value, or like NOI over value. Right? Pretty conceptual, right? Easy. Okay, and then right before we run out of time, I was just going to pull up the pro forma. We could sort of talk about it at a high level, before we part today. Share my screen. You guys see it?
Yeah.
Awesome. Okay, the Excel doc, perfect. Let me zoom. Actually, no. That should be fine. You guys can see it pretty well. It's not too small. Yeah. Perfect. Okay, so I'm not going to dive into everything just yet. You still have to digest like everything that I just dropped on you. But the general formula that you're going to come out of this, pro forma, is it's just going to be your total rental income, right, less your expenses, right? It's going to give you your NOI. It's pretty straightforward. It's just like your income less expenses gives you NOI. This is sort of like the profile. If you were to just like dive into a building, this is it. This is the building, right? If you want to know how well it's performing, like in a loose sense, right? Your analysis is going to start here. This one's a little in depth too, so I didn't mean to make it too complicated. What's that? Exactly. No, yeah. This is I got this from the REFM certification. If you guys, I guess, are ever in the market to just be certified in real estate, one of the good certifications you can get is called a REFI, REFAI, Real Estate Finance and Investments. And more specifically, you can get the REFM, Real Estate Financial Modeling Certificate. I'm still working on mine. I need to take my test, but it comes with everything. It's expensive, so I wouldn't recommend it like too soon. I think like the textbook is like $3,000. Sucks. I know it really sucks. I was given it for free, so like I would not it's not worth it right now. But just like in the future, for any reason, like if your company is willing to pay for it or anything, just take it, just do it. It's really easy. And of course, like you get materials like this. So yeah. So typically, I mean, some of the things are labeled differently, but just to dive in a little bit, right? You're going to have like your rental income, right? Your rental income, less vacancy, right, is going to give you, it's not called it here, but it's going to give you your effective gross income, EGI, right? So it's just how much the property is going to make. And like, we're trying to forecast these numbers too. So if you look at the top, I'll pull it up here too. You're looking at all of these assumptions here because like the numbers are moving. This isn't a solid thing. You got to account for inflation, rising costs, whatever it is. Your own growth. Of course, you're gonna bump rents year to year. So you arrive at EGI. You're gonna take out your operating expenses for the people that are in my facility and property management tax. You can see that one of those items there is property management, right? I hope so. Yeah, management. So you're taking, you got to pay you got to pay utilities, taxes, insurance. There's costs associated with it. So it's not that complicated of a sheet, right? And you're going to arrive at your NOI. The whole point is that you're arriving at an NOI, and that's what we're using to value the building. Right? The whole point is this entire sheet here relays over to our cap rate. It's like the most important metric in real estate because It's reflecting all these costs that we have, in our pro forma, right? And just as an added little bonus, as a little fun fact here, if you say this in an interview, they might actually be impressed that we have what is called a cash flow cap rate, right? And that's how much you are making, right? After after your other expenses here, right? Actually, this isn't even, you have your unlevered cash flow. If you include how much like your debt service is, you arrive at your cash flow cap rate, because that's like how much you're making. If you're like going out to like a bank and you're like trying to finance, like sometimes the mortgages, they'll say like, okay, that's your cap rate, but like, what's your cash flow cap rate after we lend you the money?
It's like that, project a 1% rule, or is it a percent rule?
Exactly. Yeah. Exactly. Like, you should be making money after we lend you the money. There's no point, right, in lending, right? So there's some things there. Couple things at the bottom here you may or may not have heard of. So tenant improvements, TIs. Are you guys familiar with TIs? Tenant improvement, yeah. So just like anything, like if you'll give the tenant an allowance to do what they want to the building. Leasing commissions is pretty self-explanatory. Capital expenditures, it's pretty self-explanatory too.
You happen to know like average numbers for TIs for like office buildings this much?
It's totally, it's very specific to the building. The way you find out something like that is whenever you're running a comp analysis, right? You start looking at all the other buildings in the area, you see how much they're giving, right? It's another factor, it's another thing like in rent, like, okay, you may charge them, let's just say $100 a square foot. You also give them, let's just say $50 a square foot at time zero for tenant improvements, right? If they need the tenant improvements anyway, let's just say what's like a business that needs tenant improvements? Not a tech firm that only needs computers, but I don't know. Like
Manufacturing.
Well, that's more like industrial. I'm thinking like office here. Like I guess like the example that comes to mind is like if you have like a law firm, like they may need a library in their office. It's like the office, the library isn't there already. All right, just give them some money to put a library in their office. That makes sense. So you have to think of it. All right. Another little thing I like to point out is ancillary income. Yeah, there it is. That is essentially just like any income that like isn't rent. So of course, like it's a building, like you can add things to like make a little more money. So it's like this counts for like parking lots. If you charge for parking, ancillary income. Vending machines is another good one, right? It's like any money that comes out of a vending machine, it comes in. It's not rent, it's there. I mean, anything you could think of. It's just every building's going to be different. They may have other things. I don't know what else. I can't think of it off the top of my head.
And you have like laundry.
There you go. Exactly, laundry. Yeah, or a valet service. Yeah, anything that's not related to rent is ancillary income. And this is really only one line item because, I mean, in real estate, most of the money is rent. And if it's not rent, well, it's ancillary. It's pretty straightforward. Yeah. So basic run through, we'll go through it later. There's steps involved, how we calculate, each figure. And, we'll walk through it next class, but yeah, I hope today was insightful. Is there any questions before we sign out?
Can you see my screen by any chance? Okay. So what I used to study for the fact exam was a combination of the Blackboard page that's available to the finance students. You just have to email the finance department, as well as the combination of the sample fact exam.
I've got the actual exam. Looks like the sample early. That's the actual exam. So yeah.
Yeah, no,
they throw any curveball.
I agree. There's like honestly one or two questions that aren't on the fact practice exam here. I know I think it was talking about like standard deviation. That's not mentioned here. It is on the actual Blackboard page. Like if you go on, I believe it's chapter 5, it talks about standard deviation. So it brushes up on the concept. If you read through it, there's just no practice problems. But as far as like the actual layout, it's identical. Towards like the last 3 questions, it starts giving you like an income statement or a balance sheet, and you have to learn how to do the ratios and operate how all that works. So far as the tutoring material, I use that combination.
Yeah, that
And
makes sense. Yeah.
so, and then far as the material that I use for the fact exam, I am unaware if you can use Excel, but I use the BA 2+ finance calculator. So it gives you a general idea of how to use a present value, future value, et cetera.
I've never used calculators, so it's not.
I know it's a little outdated, but
We just always use Excel, it works, but I've never.
yeah.
It looks exactly the same, Excel on the calculator. So it shouldn't be. Yeah, one of those on my phone, so
Sure.
I can practice on the phone.
So I guess jumping straight into it, the first question asks, what is the present value of $100,000 received in 5 years from now, assuming the interest rate is 8% per year? So off the bat, the first thing I like to do when going through questions like this is identify what am I looking for. So I usually write down on a sheet of paper the five key pieces of information. So obviously your time, your interest rate, your present value, your payments, and your future value. So in this case, we don't know what our present value is. We know our future value is $100,000 received in 5 years, which is our time frame. Our interest rate is 8%, and we don't have payments on this one, so it'll be 0. So starting off, I don't know if you want to take a look at what I do over here, but I have plugged in 100,000
So you
into,
can turn it toward the camera.
where's the camera? Oh, right here.
It's too dark.
Is it?
Yeah, yeah, you're getting a reflection on the glass. So it's not,
Oh, that's not good. Hmm. What do you suggest?
I don't know the-
Maybe there's like a module of the actual calculator. Let's see.
Yeah, I've seen online and you actually can.
What's calculator?
Works on the phone. Got one on my phone. Maybe you could use mine on the phone. Maybe. Let me see if I can find it. Here it is. That would show up on the screen. I have to go look.
Can you tell me?
Well, I can't see it on this. Might work if you stop sharing.
Stop sharing.
That way you'll read the whole screen.
Okay, let me see here. Stop share. Cool. Why thank you, just I gotta put your password.
Oh, sorry.
Do you see it now, by any chance?
Yeah, yeah.
A little better.
It works. You don't even have to be that close.
Okay.
Yeah.
So starting off,
Put it away.
I guess I'll go back to sharing the screen. Share screen. And as I was here, cool beans. So yeah, so starting off on the first question, we know the present, or we don't know the present value, but we do know future value. So I'm going to plug in 100,000 right here, and that will be our future value. So just like that, which is the f of v function, which is just shortened for future value. And then we know our 5, which is our n, which is time, and then 8%, which I'll just put here. You just plug in 8, and that'll be it. That's just interest rate over.
Yeah, have the calculator a little further away, and then again show what keys you actually hit. So you hit the future value after the 100,000.
Yeah, so the future value will be f of v right here on that. And then the I of y, which I just plugged in right now, was 8% yearly. And then n, which is time. So that's in this, the first problem is 5 years from now. And we don't know our P of v, so that's what we're looking for right now. So then, we hit P of v, or whoops, like that, and then like that. And then we hit compute, POV, and it should give us 68,000.
Where's the compute button, the yellow one?
It's the top button on the left, the farthest from the top.
Alright.
So present value will be 68,058.
Yeah, the
Um,
compute button's what I always use. Okay.
The reason why it's spitting out a negative is because I forgot to put negative sign on the future value. But
Yeah, but
it's implied, yeah, it's implied that obviously the 6805,
Okay.
which in this case would be letter B right here.
And yeah, in Excel, it's the exact same thing. You just probably-
Again, I wish they would like, because again, it's a lot more efficient. I feel like obviously nobody's using calculators.
Carden said, Dr. McMahon said they can use Excel, but I don't know how they make that change.
I think that's more on the like the actual testing services department side. So they're not allowing it. I'm sure the finance department allows it, but in any case.
You have to log back in.
Come again?
You have to log back in.
To- Oh,
That's the downside of a phone.
yeah.
Oh, well. Okay, well.
So honestly, let me just,
Right, so 100,000.
yeah, so the first thing I do is plug in 100,000 into future value.
0.08 price of Y.
You don't even need to do 0.0, you can just punch an 8.
Oh, really?
Yeah, you can just punch an 8 and then you punch it into the I of Y. It's already implied that's the percentage. You just punch in 8 for I of Y, and then you punch in 5 for M, and you just click compute P of V.
All right. Boy, I never use these calculators. So,
Teaching you something new here.
so I hit present value. No, I hit payment. That's my problem. Okay.
So,
Yeah.
yeah,
Let me try again. 100,000.
100,000, that'll be your future value. Yep.
8 is my rate.
Yep.
5 is my N. And I want the present value.
So then you click compute. $100,000 here, and then that's your future value. Then 8 will be your I of Y, and then 5 will be N, and then I think you just click equal.
Oh, you have to even
Yeah,
first.
and then you can compute, oh, but just did it right now, huh? Okay, well, that's weird. So 100,000.
I've actually watched videos, but there's one key I'm missing somewhere. That's getting to hit future value.
Future value. 5 years. That's your percent, which is your I of Y. Then if you, that's weird. That's exactly what you said.
36 makes sense. So yeah, it's good.
Okay, so 100,000.
But you got it on the last time, right?
Yeah, exactly correct. So
It's future value.
future
Yeah, you're
value,
doing the same thing.
5%, which is here.
No, 5 years.
Oh, 5 years. Oops, that's 8. There you go. Percent there, and then 5 years.
Yeah.
Uh,
You're having the same issue, doesn't it? But you got it. That's what's so strange is you got it right the first time.
Yeah.
So is there something like I might actually hit payment, so maybe we just need to clear this whole thing.
Let's click clear word.
All right, well.
That's weird.
So calculator is going to be important, so I don't know how to.
Calculator will be right for it.
How you can get a calculator onto the.
So, I mean, we'll just do it here. So, is it here? Yeah, I can. So we know that the. Is there any way I can share the whole monitor? Yeah, right. Let's see. That way I'd just be able to do the work on Excel.
Yeah, if you do an Excel, it works. It's just getting it to work on the calculator.
Sure.
I mean, I remember once borrowing a calculator at USAA. The guy pulls a calculator out of his drawer and he blows the dust off of it. It's been sitting there for years, never used. Because we just I wish they wouldn't teach calculators in college. I wish they would teach Excel and leave the calculators and put me off. The only time you would use calculators if you're going to a meeting, you might need to calculate something, but
Yeah,
even then it wasn't all that useful.
I'm just gonna use the,
Yeah, just.
the bottom itself.
Sheet.
So I think I can actually just copy this whole problem honestly.
Yeah, you could do a snip of it and bring it over.
There we go. So we know in this case that we don't know our P of V, so we know that our N, which is just considered time, will be 5 years. And then we know that future value will be 100,000. And then we know that our,
I worked that time, but I got 68 that time.
oh, then probably it just had to be cleared.
I think, yeah, there's something in there.
Y, which in this case was what, 8%. So in that regard, the function just PV, right? Present value.
I think so.
No.
This is where I think you do key is negative 100,000.
So our rate's that. That, and then
5 years is gonna work.
no, probably gonna have to change it. Yeah, give me a second. Escape.
Comma minus.
So 8% here. Then you do 5 years, and then that's 0, and our future value, which should be that. Honestly, then you just close it there. Yep, 68,000. So it's the same thing. It's just obviously a little bit more efficient on Excel, but
Yeah.
the again, the reason why it's
Well,
submitting it.
I assume they use calculators in their class in 3013. I don't teach it in my class.
They don't. They use Excel. Yeah, they use Excel for 3013 and 3023.
Yeah, mine, I just use Excel.
So that's the first one, and then on number 1 against letter B, obviously that probably should have taken a lot quicker than it needed to.
What you might emphasize, when I somehow keep something wrong, so I got, 130, we know it's gotta be less than 100,000, it's gonna be significantly less.
Sure.
Because you just think without compounding, it's $8,000 for 5 years, it's gonna be down.
So again, it's like how you mentioned previously, the majority of the exam is just going to be computing present value, future value, or anything in that regard. So they're calculating the amount of time it's going to take, the present value, the future value, or your interest rate. So as long as you're able to understand how the 5 functions here, present value, time, future value, payments, and interest rate, how they all correlate with one another, then that should be the majority of the exam. And you're already 2/3 of the way there, I'd say. The other majority.
Well, but then you have the bonds and the stocks that are kind of present values.
Sure.
As well.
Yeah, again, it's like stocks and bonds, and then understanding an income statement and all that. But for the most part, like I said, the majority of the exam will be just computing that and how they relate to one another. So I guess we'll just do number 2 real quick, just I guess to wrap it up here. At least that way I know what to troubleshoot next week, so that would be a little more efficient. Why we just start actually making an entire brand new Excel spreadsheet with your problems and the problems here on the fact. So Aaron places $200 in a savings account that pays 7% interest compounded monthly. How much will she have in the account in 3 years? So the thing to take away here is that it's compounded monthly, as opposed to the first problem is compounded yearly. So that's the first thing we have to keep in mind. So let's just start knocking out like we did before. PV, Y. So we know she placed $200 in the savings. That's our future present value because she just did that right now. Then obviously the easy one, 3 years, that's her time. We are looking for, in this case, how much would she have in 3 years, meaning in the future. So we don't know her future value, which we'll just leave right here. Our payment here is because it's not a reoccurring payment of $200 into the savings. It's just one time. We got a 0. And the I of Y, which in this case will be
It's compounding monthly, so that's gonna,
it's 7/12.
yeah, 7/12. So you do the math here.
So 0.58. My end.
Yeah.
So
5%.
that's just in regard because it's compounded monthly, so there's 12 months in a year. So that's why we use 12. If it was, for instance, compounded quarterly, you would use 4. If it was compounded semi-annually, you would do it twice. But for the instance, for problem number 2, we're using compounded monthly. So you do the 7% interest rate over 12 months. So that gives us.
Number N's gonna be 21 in that case, or,
So
no, 36, right?
we'll check right now. So F of V be here. So our rate, which will be that, comma, the and per, which is time. Oops. There, and our present value is that. Oops. It's not working there. Okay, so can I just click? I think if I just close it, should be. That's not right.
Yeah, that's.
What did I do wrong here? Future value, which in this case is the rate, which is 0.58 over the number, which is time.
The time should be 36, and I think.
Oh, yeah, you're
I
right.
think in this case, I think Excel wants it as percent, so I think they want it to be 0.0058. Be my guess.
Think so? Oh, yeah.
Yeah, I think Excel.
0.58 there, but that still doesn't change it. Now, let me try one more time. So the rate, which in this case is that by 36 months, which is there. Now I got it. That's popping up. It's 246.59. Yep.
Now let's see if I can do it on the calculator. All right, so 200 is your present value.
200 is the present value. We are looking for the future value.
I, in this case, is 0.58333. On Excel, it's 0.00588. Your N is 36.
Yes, goes 3 years times 12 months.
And then
Try doing 0.07 divided by 12. And then plugging that in, that answer in as your I of Y.
7 on the calculator.
Yeah.
It doesn't assume it, but it just assume it was
Not
percent or.
if the answer was already 7%, like already, but because we have to compute it monthly, I think you have to do 0.07 divided by 12 to get the actual 0.0058.
Okay. Where is she?
I'm just gonna do it on mine. Isn't it?
Or not do calculator because it's.
There. No,
Excel is pretty straightforward, even without the function, really it's just $200 times 1.07 divided by, 1 plus 0.07 divided by 12 raised to the 36. It's real simple in Excel.
That's weird. It's not plugging in. So that's something I actually have to brush up on too, because I haven't used the calculator since I took the fact. So let me see here. So yeah, it's 246, and that's in this case letter D. So for the third one, your grandmother bought a house 40 years ago for $20,000. She sold the house for $92,000 today. What was your grandmother's rate of return annually on this investment? So let me see here. Let me brush up where that question is at.
Excel, I can do that in 2 seconds.
Yeah, so we obviously know that the present value when she bought the house was 20,000. We know that the future value of that house was 92,000. And obviously we know that the N in this case was 40 years, because that's the time. And obviously we are looking for our I of Y in this instance. So we will just put Y in this case, I'll put a question mark there. So what's the formula again for rate of return? Isn't it just R?
Probably great. But I know I calculated in Excel. I don't think Excel function.
Yeah. But it's
Period is
40, comma, the payments, which was 0. Oh, that's our present value, so that's 24. Yeah.
Type the 20 as a negative number. C6, I think. That may be why it doesn't work on the calculator.
So. Oh, I know. Yeah, you're right. Statements. No, I think, is it?
Well, the way
Yeah.
I think about it, you're asking, you invested 20,000 times 0, which is a negative 20,000, and you sold it for 92 years, a positive number. I did it that way on my calculator, and it came out right, negative 20,000. So you might try minus.
Let's try that real quick. So here. Only reason why I say that's because obviously in the future value, like in the formula, it's in parentheses. So I'm just implying that those parentheses obviously is a subtraction, it's a negative. So let me try.
Oh,
4%.
sorry, that looks right. Now.
Yep,
So it's 3.8.
3.89. Yeah. So I think if it,
a couple of decimal places.
yeah, 0.89. point zero
Yeah,
point
that's what I got,
three.
but that's what I did. The way I did it, just in calculator, is I do O parentheses 92,000 divided by 20,000. Close parentheses raised to the 1/40th minus 1.
Mhm.
And it's much faster than all the keys. I can do it in 2 seconds on Excel. But with all these formulas, it takes forever.
It's a lot of formulas, but I feel like
It's like calling for math or something.
I just feel like obviously if you just learn like just like a couple of the key formulas, like there's definitely like too many to memorize, like without a doubt, like there's just way too many. But obviously some of the ones that are just more, I guess, like crucial to the curriculum are the ones I've memorized.
Well, I think if you're on this calculator, you have everything with higher or is always times 100. So you have to know.
So-
I got that one to work.
Cool. I don't know what how that. So it looks like here, school. So in this instance, when our
How
president,
long would it take? End of it. How long would it take to, 25,000.
present value is 10,000.
5,000 is your future value.
Yeah.
10,000. Probably minus 10,000 is your present value. All right, so you're doing the future. If I don't
Yeah.
I don't know what their thought process on that is.
Percent. That is a question mark. And that's not.
It says 15
What would that be? I'm trying to remember the formula for that, but I can just do that here. Let's see. So this is our value. We know that's our I of y, and then the answer should be close to like 15 years, no?
Yeah, I got 15.2
15.2.
or something.
Yeah, that's what I got originally. I don't know why it's not plugging in anymore. So 10,000.
This one I don't know how to do. Excel solve for it. That's an interesting one.
Yeah, that one actually.
Calculator is a lot easier.
Ten thousand present value. Enter. And then future value. And then 6%.
You can do it on your calculator, right?
So if I'm plugging in as a 10,000 future or present value was there. Present value. And if I do 25,000, which is the negative, which is our future value, then 6%, which is our annual interest. Yeah, 15.73. That's what I'm getting on my end. I just don't know how to do it on the. I just don't know how to do it on the formula.
Yeah.
But
It's from there you can do it. But, solver would tell you.
Yeah, that's what I'm getting on mine over here.
Yeah. There's got to be a way to do it in Excel. We could probably.
And per.
So equal inference is what you get. Yeah, there you go. So the rate's 6. There you go.
All right.
Infer, okay.
Cool.
That's good.
Now I know. The next problem is PM. Just like anything else. Looks like everything here is going to be in months.
15,000. This is a good one. Yeah, it's Excel will handle that one, no problem.
Right now, our present value is 15,000. We know it's I'm pretty sure future value would just be y. It appears to be 8 divided by 12. Divided by 12. Which is what, 4 years? One's 48. So in this case, it would be value. Should be 366.19. 366.19.
Sounds right.
Present value is $15,000 on the car loan.
Months.
It's 48 months.
48 months.
Yep. Yep. Cool beans. Stream of cash flows. Thing now to let me copy. So it says Rachel is due to receive 2 payments from an insurance company. Why is it? How would do you know how to condense the actual cell? Would I just merge a whole bunch of cells together?
You could merge a bunch and then wrap the text. Yeah, I think that's a lot. Excel.
Oh, that's not what I wanted to do.
So I do all agents. So select. I would select them all. Like I would maybe go across them to goes down and four columns across or something. Alt H and C.
I just merge it. Yeah.
Error. Wrap the text. Wrap it.
So it says Rachel is due to receive 2 payments of 2 payments from an insurance company. She'll get $1,000, exactly 1 year from today, and $2,000 2 years from today. Instead of 2 payments, the insurance company is willing to settle the account. So the first thing I'm just going to do is just write out cash flow 1, which is $1,000, and cash flow 2 is $2,000. So it's $2,000 2 years from today. Instead of 2 payments, the insurance company is willing to settle the account by making 1 lump sum payment to Rachel today. The insurance company applies a 6% discount rate for the 1 year and a 8% discount rate for the 2 year cash flow. What dollar amount? So I'll just do. $6%, and the second one was 8%.
Here I use the present value function and then present value function.
Oh, yeah.
Discount for 1 year. Yeah. I don't know if you can use a function here because you have two discount rates.
Yeah, I don't think we
You
can.
have to just calculate each of them separately and add them together.
So what was it? It was 1,000.
So 1,000 divided by 1 plus the rate.
Yeah, okay, yeah.
1 plus the rate. 1 plus 6.
It's yeah.
1 plus
That.
the time. Here it's 1.
Okay, and then the second one I was going to do.
Same thing on that for 2 years.
1,000, no more hand sanitizer?
No, this is lotion.
I was about to say, you can't.
Hand sanitizer is killing me. So
You're going to kill your hands right
I
there.
found some lotion that's been on my cabinet for like 20 years. I don't think how much it is, but it still works.
And I can just sum this.
Expiration date on it. At 2658.
Yep, 2658.
7, exactly. Yeah.
Cool beans.
I really think that's the only way you can do it. I don't think.
Yeah, I don't think you can.
the calculator can handle 2 interest rates.
I don't think you can either. But I mean,
Simple
it's not. Yeah, it's not asking for a lot. So he's got to know the present value
You
formula.
could do it on the calculator each piece and have to add them together. But
Oh, especially yeah, you could not do it on the calculator. I know that for a fact.
yeah, it'd be 2 problems and you add them together. Yeah.
So pretty easy.
But it's certainly a question, even if they're not exactly sure, it's one they should be able to figure out. just by the knowledge of present value.
I agree. Now, I guess the last one here is a multiple choice one. I don't know. It's multiple choice word problem, but I guess it's just part over. What?
Postcolors, postcolors, is what they're called.
Oh,
Hey, postcolors.
there you go. Perfect. So number 7 on the exam is asking.
Increases without limit, the present value of cash. Higher interest rates, what? Oh, future value, the present, future value of a future. So what's the present value as interest rates rise? It's gonna get smaller and smaller and smaller, right? It's gonna approach, let's say 0, right?
Yeah.
Did they give you the example, the answer?
Yeah. So as the discount rate increases without limit, the present value of future cash flow, approaches 0.
Yeah, they switched it, the future value of present cash flow would approach infinity.
Yeah.
All right, yeah, they should know that.
I mean, just by process of elimination, obviously remains unchanged is completely wrong. That like if it just that's an easy one. So that remains wrong. And then at that point you just have 3 options, right? And then obviously approaches negative infinity wouldn't be it.
Yeah, it really comes down as.
It just becomes down to a 50-50.
Raise the value or reduce it. So
Yeah, it
the
either.
values go smaller, the price go bigger.
So I think that's an easy one. It's a true 50-50. I feel like if you're stuck on these type of problems.
Everybody should know present values go down with higher rates, future values go up.
Yeah,
Because something
they're just inversely related. But
The way I say it is present value you're dividing by 1 plus the rate, future value
multiplying by 1 plus the
the higher
rate.
the number, the more impact you get.
Yes, exactly. Just one's division, one's multiplication. But again, it just with problems like this, there's like, if I can recall, there's honestly like maybe 3 or 4 word problems like this, and they're just kind of just like pretty simple. Common knowledge. There's not like much you can study on. It's just whether you know it or you don't. So
If they're not sure on that one, they probably need to
kind of just brush up.
take those problems, take those chapters over.
Yeah. So it's a 50-50 on this one. It's either approaches infinity or approaches 0. So there's that. And then
Okay, I think I'm gonna get started because I kind of have
Yeah.
a bit of information
Okay.
on this one. Okay, so today we're gonna start the first part of the certification. It's called economic indicators when you go into Bloomberg. So once again, when it's explaining, you're gonna go to the UTSA library, look for Bloomberg market concepts. You're gonna sign in with your UTSA email and make an account. Once you make an account, you're gonna go to BMC on the top bar. And the first thing that's gonna pop up, the first lecture is on economic indicators. So this is just kind of, before we get into that, I do have podcasts of the week. Here are some recommendations. These are some I've been listening to on the go. If it's early in the morning, I tend to play it in the shower because, if you're a busy person, you just find time for the things you like, right?
Yeah, I
Okay.
do it when I'm making lunch or something.
Yeah, that's honestly my favorite time to listen to podcasts, or like when I'm just like sitting down or like laying in bed. Sometimes I'll just just distract your brain or keep it going. It's really good to keep your brain going because, man, the things you could find out through podcasts is crazy. So first thing we're going to talk about is what is GDP? So GDP is gross domestic product, total monetary or market value of all finished goods and services produced within a country's borders in a specific time period. So if you go into Bloomberg, and of course, here at the Financial Studies Center, you can come in and make a Bloomberg account. And what you're going to do is you're going to type in world GDP. Then you're going to look in securities for the most current. And then you're going to look at a GP line chart. So how has it grown? From 2 trillion in 1964 to 79 trillion in 50 years later. Man, that's pretty good. So 8% compounded annual growth. That's what's going to show you. So how do economic indicators affect? What I meant to say was how do economic indicators affect the, businesses? Investors can determine economic health through economic indicators. Large established economy with well-established indicators. US took over the UK to be the world's largest economy in 1872. The economic struggles of the past led to the US to create ways to determine economic health, right? So GDP was created after all the recessions, after, roaring 20s, all those things kind of came into play so that the US could keep track of, okay, is my economy going down today? Is it going up? How are we going to know? How can we track these? How can we predict? How can we forecast? So GDP varies for every situation. There's a lot of things that go into GDP that many countries have different percentages of. So Italy, right? So Italy's GDP went up 70% because they included the black market in their calculations. 89% increase for Nigeria due to a survey that found all these new companies within their country. US enhanced the report of GDP due to the tech sector, which, I mean, everybody knows how tech has become this booming industry ever since it was created. So the question I'm going to ask today is, how does tech boost GDP? Professor Sweet, would you like to
Well,
answer?
they produce hardware,
Mhm,
they produce software. So GDP is goods produced,
mhm,
which is a hard number to measure, but it includes services. So I'm not sure exactly how they measure it, but yeah, every time you develop new software, you develop new hardware. Like I was listening to a podcast on Velodrome today. They produce bikes, but they also do a lot of software, content for the bike, and both of those would increase GDP. Anything to produce something new. increases.
Yeah, so exactly what you said. So a lot of companies kind of mix around, right? They have different types of products that they do come out with, whether it's bikes or whether it's the software for the bike. Then both these things will boost GDP because GDP relies on the economic health, right? So it's goods, it's things we sell, it's things we buy. Okay, so there's a knowledge check. In 2015, an accounting gimmick gave Ireland a 26% growth rate in GDP. What does this event reflect about the nature of GDP? So I have 4 answer choices on the side. Governments are required to change GDP calculations every 5 years. Inputs to GDP are all qualitative and not quantitative. Because GDP is official, its numbers are not subject to interpretation. If the measurement of economic activity involves GDP, can change. Which one do you think it is?
Probably the last one, the first 3 don't make any sense.
Oh, go back. It is the last one. The answers are actually under this thing, but it's not coming out for some reason.
The first 3 don't make any sense. The last one seems so obvious.
Yeah.
Just the phrase GDP can change, obviously can change.
So.
But yeah, I mean, the Nigeria one, I remember the economist writing about that.
Mhm.
And at one point you say, well, it seems kind of fake, but when you look at it, they really were missing a big part of their economy.
Yeah.
But it does make you think, boy, there's a lot of subjectivity in these numbers.
There is. I definitely think so. That's also something that they mentioned later down into this topic, that GDP is kind of, it's kind of shaky. And it's not investors or portfolio managers' best interests. So when it comes to, buying in, so just keep that in mind later on.
Yeah.
So economic statistics, they are used to measure a country's economy. It shows us what important. Basically, it's used to measure another country's economy, and it shows us what is important to that country's economy. For example, inflation. If I go into Bloomberg and I see that, Europe has a lot of inflation that day, okay, we can see that Europe is, raising the prices too much, or they have too much housing, or their price of home goods is going up way too much. And I feel like that could also help us, because when what we're investing in is related to those countries, then we can see, okay, how is this going to affect my investment? When analyzing a security with heavy exposure to a certain country, using their economic data is used as an input to the investment process. So if you go into Bloomberg, there's something called Economic Data Watch, ECOW. So you find the most important data by the country. So what would matter the most to investors? That's a question. What would you think?
Well, as I tell my class, as a stock investor, the most important thing about a stock is earnings growth, and earnings growth is tied to the economy. So I'm looking for anything related to growth. Are we growing or are we shrinking? GDP data doesn't help much because it's old,
Mhm.
but the inputs to GDP, like employment, like product, production, those kind of things. So kind of the leading economic indicators, what are those indicators that tell me how fast we're going to grow in the future? As a stock investor, that's the most important. As in bond investors, I'm worried about interest rates, so inflation.
Because
Fed
then bonds
policy
are
would
more
probably be
expensive.
important there.
Mhm. All right, so exactly that. So what matters most to investors? Okay, so these economic indicators all come into play with GDP. So it's not just GDP. GDP is a percentage that shows all of these and how they're affecting the economy. So you want to look at the economic growth, you want to look at inflation, you want to look at unemployment, and you want to look at business confidence and housing. Housing, it's not too crazy, but I know that some countries, their housing is a main cause of inflation. So you just want to keep those in mind as well. So economic growth, right?
Before you do that, just I was going to mention,
Mhm.
I typed ecal into Bloomberg and they say it's going away March 14th. So instead use ECST.
Oh, okay. So if we go back,
Yeah, so ecal is going away. It's like,
okay, so what he was mentioning is that ecal is no longer going to be in Bloomberg, I believe so. And now it's going to be,
ECST.
okay, so it's going to be ECST, right? So I guess that's economic sector.
It doesn't tell you, it's the ST is for economic world statistics.
Okay, so it's economic world statistics. Okay, economic world statistics. So yeah, just a correction on this one. You might want to look up economic statistics on Bloomberg on Google just in case, just to double check. This is not correct.
Well, it still works until March 14th. Then it goes away.
Okay, well, let's hope that people come to class next week, and then I'll probably just let them know. Well, hopefully. We're gonna talk about economic growth. So we have gross domestic product. GDP is equal to C plus I plus G plus parentheses X minus M parentheses, right? So what do these letters mean? Right? So you have your gross domestic product, and what makes up my GDP, right? So there's personal consumption, which is C. I represents private investment, and G represents government consumption. Right, so, and then X minus M, X equals imports, M equals, X equals exports, M equals imports, and together X minus M, so exports minus imports is equal to net exports. So what's happening here in this graph? So let's kind of get into it, right? So we have our GDP, and then, so this is the US. We have our personal consumption, which is about, 160. Yeah, it's about 11,655. We have our gross private investment, we have 2,865. We have negative exports, so we have more imports than exports. And then our government consumption expenditures are 2,908, right? So all these together, we can calculate that our GDP would come out to 16.8 trillion. So if you want to go into Bloomberg, kind of mess around, see if you can calculate it yourself, I think that would be great practice. And I would recommend that you do that every now and then, just to, keep your brain fresh. So before we get into looking at GDP changing yearly, let's kind of look at this knowledge check real quick. So consider the formula GDP, right? A country is undergoing a boom in consumption of domestic and foreign luxury goods. In 1 year, the dollar growth in imports is greater than the dollar growth in domestic consumption. Assuming nothing else has changed, what happened to my GDP? All of a sudden it boomed, and then my dollar growth is now changed. the growth in imports is greater than the growth in domestic consumption, right? And nothing has changed. So we're going to assume, right? And we're going to say, okay, well, if they're balancing out each other, then it probably went down. So that the correct answer was that it went down. It literally just says it went down. But basically, you know, it kind of balances itself out, right? So like how stocks do it. When stocks go reach a really high volatility and then they come down, they kind of go to their average and they kind of stay there for a bit. And then they'll fluctuate depending on the stock, right? Stocks are kind of a little more volatile. They kind of fluctuate a little differently. But okay, so inflation, right? Inflation is also a very big economic indicator. I think this happens very often within countries. So your fixed income investors, watch carefully, right? Because inflation will rise the price of bonds. So what is inflation? I keep saying that. What is it? It's when a country rises the price of goods. And you know, the average living standard stays the same, but everything else goes up. So GDP report is really important for policymakers. They look at the GDP report just to make sure, like, okay, this is how we're going. This is how the country is doing. This is how the economy is going. And then CPI, Consumer Price Index, is also a source that they use to kind of see food, housing, and automobile. So which of the two would probably be more important, the GDP report or the CPI?
They're both somewhat lagging information, but yeah, CPI is a little more timely. So I would think today the market almost ignores GDP, not because it's not important, but because it's new. They have information elsewhere.
Yeah.
So the actual report, the GDP report, is somewhat ignored by markets because they already kind of know. But CPI, I think right now it's pretty important. I know there's times where CPI, the market just doesn't care at all, just because it's always 1.5%, 2%. But here recently, obviously, it's. So I would guess today's CPI report would have more impact than the GDP.
Yeah, there's I mean, GDP report is good for keeping track of things, but I think CPI is more relevant. So the GDP report takes, I think, about a month to come out, and CPI is currently, you know, recalibrating itself. So
well, the other thing, I saw a really good presentation. The guy, I think he was from, I can't remember, Chase or somewhere, but he would show the initial GDP report. Then he showed the revisions, and he showed that the initial report is really very different. It's an estimate that's not even a very good estimate. So he said one of the worst forecasters of GDP is the initial report.
dang.
So they thought it was 2%, now I think it's 3%, then it was negative 2%. You know, it's like all over the place. Whereas CPI, it doesn't get revised as much, and it's more timely. So, yeah.
I definitely think so too. I was looking into too, like in Bloomberg, if you look at CPI reports, like it just makes more sense because it's categories. You can see each category and how they come into play.
A lot of detail. Yeah, I love it. I know it's detailed.
Yeah, I think when you put all these categories into one thing, they get lost in the mess, right? So it's like it's kind of harder to see where exactly the problem is starting and how we're going to fix it. So unemployment, right? Unemployment is also a huge indicator. I think that one's also very, very common. Everyone kind of knows what unemployment is, right? The economy shrinks when we have a high level of unemployment. So why does that happen? Why is an increase in unemployment a decrease in GDP growth? How do these affect, right? So if I have a job and I go to job from 9 to 5, right? And I work every day and I work in the housing industry, right? So let's say I'm a construction worker. I go to work, I come home. I go to work, I come home. And then one day they just cut off all construction workers. What happens to the housing market? Who's going to build your houses? Who's going to fix your pipes? Who's going to hire your subcontractors? Who's going to buy your materials? All these companies rely on workers. If we don't have jobs, we don't have an economy, right? So if you go into Bloomberg and you type in US real GDP growth, and then you go to the GDP CYOY, I'm not sure how to say that one, index, you can kind of see a GP line chart of unemployment and how it directly affects your GDP growth.
I don't know what C stands for, but year over year, yeah.
Year over year, yeah, because I mean, like the way they're explaining it in the module, I was like, that doesn't make a lot of sense. But I would honestly really recommend practicing in Bloomberg because I feel like if you could see it, and if you can like go there yourself and find the answer yourself, you're 10 times more likely to remember these processes and how you can use them in everyday life and how it's going to make you a better investor, how it's going to make you better at selling bonds, buying bonds. You know, it's going to really help every business if you just go in and you practice, you know, these little things every morning. So business confidence, there's PMI indicators. It's kind of like this, hold on, I think it's on the next slide, right? So this little thing right here, PMI indicator, kind of shows how confident investors are in this certain area of business, right? So, and then ISM manufacturing, one of the biggest ones too. You go to the, I can't pronounce that, but that index, if you type that in right here, you can find a lot about how confident businesses are. And then, of course, the GP line chart too. You can kind of see it visually. That way, you know, you're not just looking at a bunch of numbers, but you can see how it grows and how it affects and how these numbers all come into play. And so forecasting and monitoring GDP. So GDP report is not useful for portfolios and traders because they aren't frequent, right? So going back to what we're saying, CPI is probably going to be your best bet. If you really want to look at what's going to affect your investment directly, right? So if my investment is related to China, right? And let's say China's having this war with Taiwan, which I'm not going to, because let's hope that doesn't happen. But, right, that might affect my investment. And what part of the war, right? So let's say, oh, people are losing their houses. We can see exactly where our investments country, right, their partner country, how they're being directly affected and how that's going to affect our stock. Right, so World Economic Calendar too. If you go into the World Economic Calendar, it can also show you a lot about each country and like the time and dates where they've done good, where they've done bad. The greater the investor interest, the greater the relevance, right? So if this interest is high, that's probably the one I want to look at.
Yeah, so that's the interest under R.
So this little indicator kind of shows,
All right.
you like, oh, hey, like this one's doing this good, this one's doing not good. So these that have like none, probably not doing so well, but either way, you might want to take a look because you never know which part you're looking at. Creating estimates, economic forecasts. Oh yeah, so you can also do, go into the economic forecast function, and then it's called ESI, so economic surprise indicators. You can kind of look at each country and like what they're forecasting for their economy in the next, I think it was year or quarter. I'm not sure if it's quarter or year, but you can kind of see their forecast and how their economy is doing so far. That's all I have for today. Oh, wow, that was pretty fast. I thought I was going to take too long.
I noticed, sir, this Capital IQ has a lot of Excel functions. Like they have hotkeys that link straight into the Excel.
That's where it looks like a Bloomberg, so that's probably that's the biggest thing I want to learn. More time on it this summer too, just to make sure I'm not missing something. It can be, sometimes there's actual typing errors. Bloomberg has gotten much better. Sometimes it's how to define the years. So you might be comparing 2020 to 2021 or something like that. And there are times, and in Bloomberg, for what I gave y'all, I wasn't using GAAP, I was using adjusted GAAP. Whereas Capital IQ is probably just GAAP. Yeah, there's a lot of. For
today, I'm going to be logged in on my laptop onto the Capital IQ and we'll just go through the video, but in the future, I'm gonna log on here that way. Once we, depending on how far we get and we start actually utilizing it.
We have to start without, well, it's not 4 o'clock yet. It hasn't updated Zoom again. Yeah, give it. Start like at 4:01 maybe.
Yes, sir. I pulled up that Celius Holdings on Bloomberg, and there's already a lawsuit against them for their earnings report because I guess they had some issue with their accounting controls and they couldn't deliver it on time. No. And then, they're saying they didn't have enough personnel to, but you have all that holdings, And it's crazy, from the time Tim Villapon made this video, Amazon had almost 800,000 employees. And when I pulled them up in it right now, they had double that, 1,600, or excuse me, 1.6 million.
All right, I'm ready.
Okay.
Couple minutes. Right, else, you have somebody else on the call. Oh, sorry.
Well, I had all these students message me, saying, we're going to come, all this stuff. And then
We attend every class. And I think I've learned something new in every single class. So let's see if you can keep the streak going.
okay, sir. Hello.
Hi.
Yeah, just log in. If you're going to do the class, you're going to do the class.
No.
Or not, or, okay.
Was it class 4? Do I need to log in your computer or?
You can log in here. We just have a class going on. So just, we'll be talking, so just ignore us. All right, whenever you're ready.
Yes, sir. All right, gentlemen, this is the Capital IQ part 2.
Under the search profiles and companies section, we're actually going to use the search bar at the top and just type in the company name. Just search for it and click on it. So let's search for Amazon. It brings up the public company profile. So you can see under company summary, there are different sheets or views that you can look at. This is a great profile page that starts with key information like number of employees, ticker symbol, year founded, etc. You can see here business description, classification, key investors, and so on. Then down here, you get some good financial information, such as the market capitalization. You can see 1.6 trillion here for Amazon. You can see its share price along with volume in that chart. Quickly, you can find the revenue, EBITDA, so on for the business. Index membership, professionals, board members, subsidiaries. There's a lot of great information that's packed into this tier sheet. So this is a great place to start getting information on a business. Now, from here, you may want to branch out. You may want to look at the corporate timeline, for example. You can scroll all the way back to the very, very beginning. So that may be helpful to navigate. You can get a detailed business description here. Let's look at their products. You can look at Amazon's competitors. This is a great way to build a comps table or get a list of other businesses that may be relevant for valuing the company. Let's look at how it's classified here under consumer discretionary. Let's click on analyst coverage.
I really like this part right here.
And we can see all the research analysts that cover Amazon. You can see here their target price and recommendation. And you can see here there are 89 equity analysts, at least in Capital IQ, that cover Amazon. And finally, we can jump into corporate governance here to get a sense of the board and the corporate oversight for the business. So there's a lot of good stuff to explore here, all under the company summary section, with the tear sheet being the primary source of initial information for the business. So start by searching for the company name, then click on it when it comes up in the search results, and you're brought right to this company profile page here. Let's keep moving through Amazon's company profile page, and we'll focus down here on the financials and valuation section. Let's look at key statistics for Amazon. We can see here some highlights like revenue, EBITDA, and profitability over time.
I noticed on his ribbon bar that he has research at the top. He has companies, research, markets. I don't know if we haven't just basically got to that function yet, or whether he's using Cap IQ Pro, which is a little bit better one, but we will find out.
Fine. You can see the company's capitalization table here, where we can see the buildup to get to the total enterprise value for the business. And we can also get the market cap or equity value of the business here. So there's a lot that we could dig into here, but first let's just move on and keep scanning. Let's look at the income statement. This is where we can control what we see. So we could go back and select more history, going back to the year 2010, for example, or 2011 here. And we could also choose if we want to see annual, quarterly, year-to-date, last 12 months, or some other type of period. We could look at original or restated filings. So there's a lot that you can toggle with here. So let's say that we want to select these 3 years of history. We've got those specific 3 years that we want information for. We can see the income statement. We could go into the balance sheet and explore all sorts of areas of the balance sheet and drill in for extra detail. See Amazon's cash flow statement, and we can dig into these numbers. So let's click on this, and you'll see some extra information come up here. You can see the reporting period, the currency, the amount, etc. Into it, it's actually going to open up the filing. So it's going to take me straight to Amazon's 10K.
That's something I gotta use in my class. That one's pretty powerful.
And so he clicked the rev.
You keep drilling down, then it takes you right to the annual report. So Sergio, I think, when we're talking about why did account jump, that may include more things. If you had Capital IQ open in the class, we could probably could answer that on the fly. Without that, having a loading report, pretty amazing.
Okay, I was able to get to the 10K. That's awesome. Yeah, and that way you don't got to go to Edgar or anywhere else.
Okay, and show me the number. So this is a really powerful way to do a full audit of financial information for a business. Here, but you can see how you could go through each of the key financial statements through different time periods and drill in all the way to the public company filing that they made. Let's take we can export everything across here based on the time periods that we have selected straight into Excel. So we can start playing around with it and building some models. So if I want to move over to Excel and start doing some of my own analysis, I can click download financials. And then we see here that the file has been downloaded. And now I've got this in Excel. So I can just jump in and I can actually start playing with these numbers in Excel. It's of course using the same view and the same settings that I had selected here. So it's just going to download whatever I've got here, which is these particular years. And if I bring this up so you can see the whole thing, you can see that it's downloaded all of the sections for me. So I've got Amazon income statement, balance sheet, cash flow, multiples, capitalization, all this great data downloaded instantly into Excel for me. That's how you use the financials section of Capital IQ. Now let's move on to look at multiples. When we get to the multiples area, we'll see that there are a variety of them, like total enterprise value compared to last 12 months revenue, or total enterprise value compared to next 12 months EBITDA. And we can drill into any of these. By clicking on it, we can see how the calculation is made. So we can see the components of total enterprise value over here, market cap plus net debt. We can also see a breakdown of the revenue. Now let's check out enterprise value to next 12 months EBITDA. So this is a forward-looking number. Next 12 months will be an estimate from analysts. All right, so here we have total enterprise value. And then we've got next 12 months EBITDA. Go into next 12 months EBITDA and I look at each of these 4 quarters. I can actually drill in. And if I scroll down, I'm going to see all of these various analysts and what their forecasts are for EBITDA. So you can see Raymond James here, and you can dive in even deeper. You can see who the analyst is, and you can see the history here as well, and you could drill in even further. But this really gives you a powerful insight into what analysts are expecting for the business. So you can export all this to Excel, of course. So that's how you look at the multiples here in the financials section. Let's also look at the ratios. So here we have all these ratios for the company sorted by category, from profitability and margins to solvency and growth rates, etc. And these are the types of ratios we covered extensively in our financial analysis fundamentals course. But if you have access to Cap IQ, you can pull this type of information instantly, as you see here, and export it to Excel and start playing around with it. Also look at supplemental. So supplemental, if we wanted to drill into stock-based compensation, for example, which is a non-cash item that analysts often play around with, we could do that here. If I wanted to look at industry-specific data, which for some industries is very important, like in natural resources, but in Amazon's case, they really just have online revenues as an industry-specific metric. And then finally, segments, where we can get the segmented information. So we could look at revenue by geography and by segment. So you can see Amazon Web Services separated out here. You can see total geographic breakdown here as well. So it's nice to be able to pull that information very easily from Cap IQ. So as you can see then, we've rounded out the financials and valuation section, Cap IQ. A lot of exciting stuff to pull here and export into Excel. Let's look at the estimates area. I've clicked into CIQ estimates, Capital IQ estimates, and we can see here the dashboard where all the estimates are centralized. You can see a summary of analyst recommendations right here with a strong buy recommendation for Amazon. You can see target price information here. You can see the high and the low, for example, standard deviation, and the total number of estimates, 46. The recommendation is outperform. So you can see there's a fairly strong consensus here of bullish outlooks for Amazon. Then if we scroll down, we can drill into any of these items. We could look at revenue, EBITDA, free cash flow, for example, and we can look out several years and drill into these estimates. So let's look at free cash flow out to 2023 for Amazon. So now we can drill in. We can see here a list of analysts and their estimates here for free cash flow. And you can see there's a pretty big range here, actually, quite wide ranging, in fact. But then we get the average here, or the mean of the consensus. So that's how you would drill into any of this. The other thing that we can look at here that's quite interesting is guidance. So if I scroll back up, I'll now click to guidance. And this is where we have the guidance management has provided for the business. So Amazon guides on revenue and EBIT. And we can expand either of these to get more information, but at a high level, we can see here, for example, for Q4 of 2020, here is the revenue range that's been provided, and here's the EBIT range that's been provided. So I've clicked in, and if I look at guidance, I get a little bit more information here, but not much actually. But we can still see the range, and we can look back through history, and we can actually see, for example, if they've been above guidance, as they have been in these cases. And this is just a very helpful way to quickly get access to all the guidance information for a company. So between CIQ estimates and guidance, you can get a lot of good forward-looking information about a business.
Good stuff. Here we go.
Now let's explore the markets section of Capital IQ. So we're clicking in to market overview, and we can see this market analysis. Here, different sectors and the relative performance over the last 12 months. Down here, we can see a little bit more detail on sector performance. We can see M&A transactions by sector. So we can see where the most M&A activity is occurring and then drill in for more info. Same thing with private placements and capital raisings. We've got new public equity and new public debt issues as well. Lots to drill in here and really get deep market intelligence in a specific industry, which is most likely what we're looking for when we're doing analysis. So in the coming lessons, we'll take a closer look at some specific areas like M&A, private placements, and equity offerings, as well as PE fundraising as well will be quite interesting to look at. But this is a great way to get your snapshot. And you can easily see, of course, which are the top performing industries and sectors and how they compare to certain indices like the S&P 500 or the World Index. And finally, as pretty much
That's
with
nice.
all areas of Cap IQ, you can export this to Excel. So then you can start to create some type of industry report or just incorporate this industry data into your financial model or into your analysis. So here it is. Here's how it opens up. And you can go through and you have even the chart. You've got all of the underlying data and so on. And you can reformat these charts to fit your type of report or your style of analysis. But this is a really great way to get this industry data into your model super quickly. Markets that we want to look at is M&A activity. So if we go to this area, we can see here by transaction value and by quarter, the value of deals that are being done over time. We could look at the number of transactions instead of just the size, and we could look at closed instead of announced, and we can update that chart. So here is volume of transactions as opposed to value of transactions. We can see recent transactions here, the biggest ones over the last 12 months. So you can see right here, these are the top deals over the past year that have taken place. You can see here a year-over-year comparison. And you can see by sector here. You can see the most active sectors, for example. You could drill in then to real estate, which has had the highest value of transactions. And if we scroll down, we're really just getting the industry overview area of real estate, where we can dig into industry news or key developments or what have you. So let's go back from the industry profile to the M&A area. So that's how we get a high level overview of M&A activity in a sector. I want to dive in and actually pick perhaps a subset of an industry or a specific time frame. We will go to transaction screening. And transaction screening is something that we're going to look at shortly as a whole other chapter, but screening is somewhere we want to spend a lot of time. Screening is one of the most important parts of Capital IQ. But for now, this is a good high-level overview of M&A activity. All right, now we're going to look at capital raising across a few different areas. We're going to look at private placements, private equity fundraising, and then equity offerings. So first, we've clicked into private placements, where you can see announced transaction values by period over time. You can adjust all sorts of filters here, and you can look back further over many quarters, or you can actually look by sectors or top buyers or what have you. So you can adjust the sectors here, and you can adjust the geographies here. So it's quite a powerful tool for looking at private placements across certain sectors.
Do you have that
Let's
option,
move
Sergio,
to
that private
equity
placements?
funds raised. Here we can look at private equity fundraising activity over time, and we can get a sense of where there's a lot of interest by going through some of these filters. So we can actually dig in a lot deeper here, but we're going to gloss over this. I just want to show you this screen. If you're looking for capital investment, you may want to be looking across all of these: private placements, PE fundraising, and now equity offerings. So here we've got equity offerings. You can see the sectors and you can see the time periods here. So you can see that, for example, financials in 2020 have raised the most money. You can scroll down and look at recent equity offerings. You can look at which sectors have raised the most with a bit more detail here. You can see the top underwriters, for example. And you can play around with all these charts and graphs. Of course, you can export the data, in this case, to a Word document. So we'll show you in the screening section later in the course how to build this from the bottom up. If you really want to drill into a specific area, specific types of companies, we will use screening to do that. But for now, this is a good top-down or high-level overview of fundraising activity. Let's take a quick look at the commodities section now. For many businesses, commodity prices are important for forecasting revenue or for forecasting expenses. So we can go and explore this area and dive in to find any commodity prices that we may need in our financial modeling. Let's take an example: Colombian coffee. We can scroll in and we can see some history here on coffee prices, and we can see the forward curve there to see what prices are trending towards in the future. So that would just be an example of where you'd go if you wanted to get coffee prices for a financial model. And now you can look out several years and see that forward curve. All right, the last area we're going to explore together in markets is the interest rate area. We're going to look here at the yield curve. This is for US Treasuries. And we can see, for example, the yield on a 10-year maturity is 0.87%. We can visualize the whole curve here, so that's nice. We can see over here interest rates in different countries. We can see a graph that compares different countries here.
And so what it is, Sergio, on
Here's the Fed
his,
discount
you can
rate,
get to him from the
prime,
top ribbon bar.
overnight
He
rate,
just kind of
etc.
customized his
Any
on
of
the
the
side
interest
to
rates that
include
you
them
may
right there.
need
But
for
you
your
can still get to
financial
it if you
model.
use the ribbon.
And of course, since in discounted cash flow analysis, everything is based off the risk-free rate, this is the place you can go to get the appropriate risk-free rate for your financial model.
Wow. It's got the Libra.
Yeah, there's so much I can use inside. Especially my screw analysis class next semester.
I'm gonna be there, sir. I will be there.
Step into
I use capital Q more than Bloomberg going forward. Let me click back real quick.
Now let's explore them. To SN. Now we're going to look at one of the most powerful tools in Capital IQ, which is the screening section. Screening is where we can look for companies. We can look for transactions like mergers and acquisitions or private placements, and we can generate ideas. So if we work in investment banking, investment management, private equity, or at a corporation, so we're talking about almost the full suite of financial careers that CFI trains to. You can generate ideas for all these types of jobs.
And then, sorry to keep pausing. And so I went to templates, right? Just messing around, and there's actually a student from UTSA that has made their own template. And so I clicked it. Wish I could share it with you. Wanted to just take a look at, I don't really want to.
Here. So we're going to spend quite a bit of time here in the screening tool. Let's click into screening right now. And we can start somewhere like company screening. And this is where we're going to set criteria. So imagine that we're looking for a company in a particular industry, and we don't know the company's name or its competitors. This is why we're using the screening tool. We're trying to find these companies. Now, one way to do this would be to search for based on the company's business description. So we can go to business descriptions, and you can search for keywords in the business description. So let's say we want to search for businesses that are in cloud computing. So the business description must contain cloud. You can see we get a lot of results here, 27,000 businesses that have cloud in the business description. Well, we want to quickly narrow this down. So let's add some other criteria. Let's say we only want public companies. So we can company type must be public company. Add that to the screen. Right away, that cuts the list way down to 1,700. Now let's put some size parameters on it. Let's say the market cap has to be greater than a certain number. So we're going to say the market capitalization must be greater than, and remember that the units that are used as default in Capital IQ are millions. So let's say we want to look at a billion market cap. To the screen. Now we just have 500 companies. Think of what else we might want to add. Let's look at location. How about that? We are only looking for companies that are in European developed markets. Okay, and now we're down to 62. Now this looks like a reasonable list that we could start to work with. So we're going to click on view results. So now what we get is this list with a default set of columns that display information. And in the next lesson, we're going to look at customizing these. But for now, we've got our list of 62 companies in cloud computing that are public, that are based in European developed markets with a market cap that's greater than $1 billion. Here we are with our list of 62 companies in cloud computing. And what we're going to do now is adjust the columns here that display the output information. So let's definitely want to have the business description, the company type, the market cap, geographic locations. Those are all helpful. Well, let's add you as well. We're clicking here for total revenue. Let's choose now the time period. We could have last 12 months, latest annual. Let's go for last 12 months and then add to screen. Right here, the total trade trailing revenue for the last 12 months. So revenue is helpful. Let's add EBITDA. And let's also add net income. So there's all sorts of things you can add, of course, to these output columns, but this is a good starting point. We've now got, the company's business description, its market cap, its revenue, its profitability, and so on. So that gives us a pretty good sense of things. Let's export this list to Excel now. All right, here's the list. Let's just read this list to Excel now. Here's the list. Let's just resize this. Let's zoom in a little. Let's tighten up these columns a bit. Business description, which we'll make bigger. And the company name. There we go. We've got here our list of companies, their tickers, business descriptions, and then we've got here their financial information. So we could go through and sort this list, or we could look through it manually. It's a manageable size with 62 companies. So say we were looking for companies to invest in or to acquire, we might want to read the business description if we're looking for something specific in cloud computing. And we may want to add a revenue requirement as well, a minimum or a maximum or something like that. And then we're starting to build a pretty interesting list for our specific cloud computing search. Go under screening to transactions. That will pull up the screen that you see here. Let's look for M&A transactions. So if we click on M&A deals, we'll use valuations as a criteria. So you see all these categories here. We can see that the total transaction value is selected here. And let's say we want it to be greater than 1 billion. Units in CapIQ are millions by default. A huge number, right? 52,000 transactions. That's because all we've set as criteria is that it's greater than $1 billion. But let's add some other criteria just as we did with the company screening. So let's look for public companies only. So let's say that the buyer, we can say that the buyer and the target are public, but in this case, let's say just that the target is public. That narrows it down to 20,000. Also select that the buyer is public. Screen, there we go. Now let's add business description. Word is cloud. We want that to be for the target. Once again, let's focus in Europe. Let's have all of Europe. We can say that that's the headquarters. So that results in 5 transactions. Maybe that's a bit too narrow. Why don't we remove that requirement and just take this list of 44. Let's click view results. Here we go. Here are the 44 transactions for targets that had cloud in their business description over $1 billion. Here's our output screen. At this point, we may want to edit the display columns. In terms of the things that are outputted here in these columns, let's say we want to know what the TEV to EBITDA multiple was that was paid. And let's also add the enterprise value to revenue ratio, again, for the target. Let's update the results. If we scroll across, we can see the EBITDA multiples and revenue multiples of the targets. So that might be helpful in putting together a table of precedent transactions. And of course, you can export this to Excel as we did last time. It's for you in Excel with all of these transactions. And of course, you can filter through them, maybe delete the ones that are canceled and just look at the ones that closed. And you may look at valuations then based on certain types of comparable precedent transactions that you're looking for. So we've looked at how to do some specific screens for finding companies and transactions. Now let's look at the idea generation tool. The concept behind this tool is that there are a bunch of preloaded screens that you can use to look for ideas for business development. So if you work in investment banking, let's click into investment banking. You can see some of these pre-created screens that they've built for us. And if we scroll down, we can see the name of them, and they're pretty self-explanatory. So we can look for acquisitions of businesses by business keyword. We can look for active financial buyers. We can look for bankruptcies. We can look for canceled LBO deals. Let's look at companies that are actively divesting assets. As an investment banker, you may want to approach companies that are actively divesting assets, and you may want to look for opportunities for your existing clients that say may want to purchase assets. There could be some interesting business development opportunities here. So you can see the screen criteria that's set up here. You can always further refine the screening by adding some of your own items here and then viewing the results. So here we can see companies and the number of transactions where they've been a seller in the last 12 months. Let's go back to screening. Now let's look at investment management. We may want to look for bankruptcies, for interesting turnaround situations. We could look at CEOs with pedigree, for example. If we believe that the management team and their pedigree is really important for our investment strategy, that is something where we could look into this. So what the screen is saying is it's saying, first of all, look for all professionals with the job title that is CEO. So essentially find all CEOs. And they have a market capitalization that's less than $1 billion. And they have had previous experience as a chief executive officer or a president or head of investor relations or investment banking or whatever else you want to add to this criteria. So that's how you can build up a history or track record for a CEO and look for CEOs with certain types of experience if you think that is relevant to your investment style. Now let's look at idea generation for private equity and venture capital. We can look for, again, canceled LBOs. We can look for companies with more than 10 investors who have beat or missed their estimates. That sounds interesting. So you can see here, you can set a certain criteria for the size of the beat of EPS, whether it's greater than or less than their guidance or estimates. That's also an interesting screen that you could run. So you can play around with idea generation for whatever industry you're in to come up with ideas to find new business opportunities. So as you've seen now through several examples, the screening section is one of the most powerful areas of Capital IQ. In this lesson, we're going to look at the charting function in Capital IQ.
Yes, sir.
No, this next one we believe.
I'm like blown away with that thing.
One of those things where it's really powerful, there's so much, it's almost.
The structure of energy markets in the non-liberalized markets, national or local monopolies are found. In terms of vertically integrated electricity retailers, there are a limited number due to the prohibitively expensive capital requirements involved in power generation, which reduces rivalry somewhat. However, for liberalized markets where it is possible to enter as a pure retailer purchasing energy from the wholesale market, the number of these players is far greater, which creates additional revenue.
You need to say what is, we're in San Antonio, so we've got a non-utilized market, CPS. State of Texas tend to be more liberalized, so we'll see. They may have to, that's the challenge of doing utilities, it's locations, everything, you gotta know where do they sell their energy, what states, what are those regulations, it's almost a state by state kind of thing. Let's look at the size of the market. So last year they actually shrunk, which I would imagine pretty unusual for a market to actually shrink. Growing really fast in 17, 18. Well, 20, boy, that's strange to me. 2020, you would have thought utilities would have gone up because everybody's home.
Mm-hmm.
But maybe corporations were able to cut back. I don't know. That's strange. They'll probably explain that why it dropped. Electric, gas, and water, so they're pretty evenly distributed. There's three. Forecast, not much growth. See, that's the thing. You got an industry that just is not expected to grow that much. So if you think about it, how do you grow a utility? You have more customers and you have inflation. So population growth in the US is not very high. And that's why location is important. If you're in a state that's growing like Texas, then your utilities are growing. If you're in a state like California that's shrinking, you're probably shrinking. So it's population plus inflation. Usage doesn't change that dramatically. You might have a cold winter, but for the most part, people use about the same amount of energy. Now, what's the one thing that might be affecting is solar panels. People buying solar panels, how much impact. So those are the kind of things you think about. So the real key anytime you're doing an industry or a sector is growth. Where does your growth come from? So you can see here, it doesn't look too exciting. 1.5% growth, that's barely keeping up with inflation. So it's not a huge growth. Next chart, just how flat it is. This industry just produces $1 billion in revenue, and that's about it, or $1 trillion in revenue, it's about it. Not much growth. Okay. All right, are you familiar with 5 forces?
Yes.
Okay.
But you said you didn't like this graph. I heard that.
I don't like weak and strong. I prefer to say weak means strong means positive for the industry. Strong means negative for the industry. I wish they would say that.
Oh, okay,
When I
okay.
say strong, I think, oh, that's good. But no, strong means bad because power is strong and it's bad for the industry. So I think a weak is good and strong is bad. So dark green is bad, light gray is good. So substitutes, yeah, what are the substitutes? Now I would consider solar panels to be a substitute. Now, very different, you think about refinery, the electronic vehicle is the substitute for refined gasoline. But here, the only substitute would be the solar panels, I would think. What else, where else are you going to get your energy? You're kind of stuck, US consumer, you're kind of stuck with CPS unless you buy your own solar panels. Now, one thing I think on the growth here that it's so low is electronic vehicles. You would think the growth in electronic vehicles would be a boom for this industry, but you're not seeing this. So that's something where you might even do a search on EV or electronic vehicle and see what they say about that in this document. And that's, again, it gets back to growth. So someone's got to power all those cars. If we're going to shift, why isn't in the numbers yet? Maybe it's the next 5 years, it's not there, but maybe 10 years from now, it's huge. So, I don't know. Try doing a search on electronic vehicle. I don't know how it's spelled.
Like within
No,
these?
in this quarters, I know in this document. Just control F and just do maybe electronic space vehicle. Try vehicle.
There we go.
You want it more general. Is that the only one?
Yeah.
Boy, I would have thought that would have been a major issue for this industry. Try searching on space, EV space.
EV consumers.
Only 3 of them. And it's all related to
Yeah.
I'm not saying market line's the best. I don't understand. I mean, maybe I'm missing it, but I would have thought this would be huge. And obviously, yeah, you know, try global, try the word global for global warming, you can see if that comes in. Other word, warming, that's one word.
No.
Or just the word warming itself. What's the other word they use?
Climate change.
Global warming, but
Climate change.
no, I can't think of the word. Oh, yeah, climate change, yeah, climate change. There's only 3 of those. Yeah, what else is a major, you know, I'm not seeing in this stuff. So EVs, climate change, alternatives, you know, try the word alternative energy. Obviously, that's part of the climate change. Only twice. The word alternative is only in there twice. That's pretty amazing. No, neither one of them has to do with alternative energy. Type the word turbine and see what you get. Those, just one. Yeah, so, oh yeah. Am I missing something? Isn't, I said, look at the related analysis. They do have renewable energy in there. Okay. See, our goal is really renewable. There you go. That works a lot better. Carbon emissions, and that's the other thing. What's that under? Switching costs? Substitutes. Yeah, I mean, I have students always ask this, you know, are renewables a substitute? Well, if the industry does both conventional and renewable, it's not a substitute because they're doing both.
Mm-hmm.
A substitute is another industry outside of theirs is providing a product that replaces theirs. But if you're producing both gas and wind, then it's not a substitute. You can see it's really weak. There's not much there. You can substitute electric by a gas generator and put it in your backyard, and it's just not working. All right, interesting. What else did they say about renewables? So that looks like you found the word renewables is the key. What is this under? Is this under rivalry?
Yes.
Imagine that's negative for the industry, but they're saying it's.
Isn't like the switching cost to go from like to solar panels more expensive? Like, just
Yeah, but to the extent people do it, and take the business away from them. I think it depends on what city you're in. I think it makes more sense in Austin than it does in San Antonio, just because energy prices are much cheaper here. So you're paying a lot for solar panels and not getting much savings, whereas in Austin, where it's much more expensive. And I don't understand their chart here. Low fixed costs. That's okay. That one makes sense because this industry has high fixed costs, and that's a negative for the industry. So you see how confusing it is. Low fixed costs is strong, which means it's bad for the industry because they have high fixed costs. I mean, how much more confusing can you get? Low switching costs. I would think they have high switching costs, which would be positive for the industry, but they're showing it. I mean, whose switching costs are they talking about? I can't switch from CPS. Okay, interesting.
well, I mean, at least, like you said, here it doesn't make sense, like because there's only like CPS, but like they always tell you like in other cities that you can choose your own at least like in like Dallas, you can choose your own energy company.
Is it low switching costs, or they have to come out and rewire your house?
I have no idea. I just thought it's because when my brother moved there, I remember he said he asked, who do I sign up for electricity? And they're like, oh, you just Google utility providers. And and it was like a huge list. And I was was like, you get to choose? Like, I thought it was just like, they have to come.
Yeah, but I would think it'd be high, because I know just switching like, by internet provider, that's a huge, if I go from AT&T to Roadrunner or something, whatever, you have to come to my house, they gotta do all this cabling, I gotta set up time, it's really a hassle. Unless I'm gonna save, $10, $20 a month, it's just not worth the hassle, I'll just stick with what I have. I would think changing the electric company would be the same, but I don't know, I've never experienced that. Yeah, interesting. Yeah, I find a way to do this confusing. I wish they would redo it. All right, so those are the energy, EVs and renewable energy. Those are the two things I think would be pretty critical to the growth. So again, we're looking for growth. What's evidence this industry can grow faster than just population growth? Renewables is an opportunity for them because they're in this business. It's also a threat because people can get their own panels. And EVs should be the biggest source of growth for this industry going forward, I would imagine. All right, coming down the page, let's see. Exelon's Southern Company. I think we have a student who used to work for Exelon. Xterra, that was the larger one, right?
Yes, that one.
They're a leading clean energy company, one of the largest. It's the largest as far as market cap. It may not be the largest as far as the power uses. It's in Florida. And that's the other thing when we get to growth, there's the industry growth, there's also the company growth. And the company growth, Florida is going to grow faster than, say, New York or California. So the fact that Nextera is in New York, is in Florida, that's positive for them. Southern is probably in California, I imagine, or no, Georgia, Virginia. Consumers Energy Group, Sempra Energy. Clears. Strategies, I don't know what strategy they have other than producing fossil fuels. As customer experience has become an essential part of the market. I don't know if CPS is doing anything for me. It's more cutting my energy off in the middle of a snowstorm. Smart meters, there's another one. So you might think of that as that's pretty critical. Smart meters. They're trying to reduce energy consumption. So that's something they're doing that actually reduces their revenue, but it greatly reduces their costs, and you don't have to build new power plants. So smart meters are, they're trying to provide just as much energy to just as many people, but without having to build new infrastructure. And smart meters is a big way to do that. I don't know how material it is, but that's an issue you might look up. And one thing, with my secure analysis last class, is kind of reading through and kind of listing out what are those key issues you want to focus in on. Smart meters is one I would definitely remember that. Deregulation was a big issue not too long ago. What happens if you type the word deregulation? U.S. was one of the earliest deregulated electric incident gas market. What's the second one say? I don't know if deregulation is still a big issue. It's been so negative in California and Texas and the press, but I don't know. I don't follow it since. All right, a lot of good stuff there, and I'm surprised there's other stuff that's not in there. Try go over to Google. Just Google EVs and utilities or something like that. There. What role will utilities play in EV charging infrastructure? Well, utility players are in a unique position to fill the gap. Yeah, and that sounds real positive for the industry.
In our corporate restructuring class during the summer, they gave us like, the class started off with a case on like gasoline stations and how they started expanding, and that was one of the topics they came up with on how with the adoption of the electric vehicle that they're gonna have to expand just the way they did with gasoline stations with having charging stations so that people could find it would be like they would want to, and not like at least with some cars you have to drive like super far to like charge your car.
And what would be the same infrastructure, so well, Buc-ee's and all these have, I don't know if Buc-ee's has any electric charging stations. Cars are gonna be something different, you know, Tesla, you don't necessarily need to go to a gas station. The issue is if it takes 20 minutes to charge an EV versus 2 minutes to fill the car, then people need to do something while they're waiting for the EV. That may change the nature. You don't want to sit in a convenience store for 20 minutes. Restaurant or something like that. I think it's so bad.
I think they started putting them like in like malls or like shopping centers.
Yeah, places that are on the main highway because people are driving through, traveling, and then that are near some attraction. It would be nice to sit there for 20, 30 minutes. At PwC, and you know, they do, it's amazing what these accounting firms, they do some really good analysis. I wonder if you clicked on that PwC analysis, it would bring the entire thing up. Yeah, boy, that would be a good one. Decade, the number of EVs on our roads will likely rise substantially. But readily accessible charging away from home will also be key. Account for less than 2%. Yeah, that looks like a really good article. You might
Let me save that one.
keep track of that one. So I start at the industry. What's the growth story for the industry? And then who are the industry players that most tap into that? So Nextera, you know, if they're a leader on alternatives, then okay, so that sounds good for them. And then the utilities, it kind of depends on where people are buying EVs. There are probably more EVs in California than Florida. You know, so try to figure out your story. It's a story thing. What's your story for this company? And so when you do your presentation, that's what you focus in on. We can do math models and valuation models, and that's all okay, but it's the story that's probably just as important. All right, interesting. Oh, you can go back to the market line if you like, or if you want to go back to the library. I think we can see what they have here. It doesn't look as strong as I was hoping it would be.
Firepower is considered weak.
Well, yes, those are small and retail consumers. Firepower is really strange here because the industry buys power, but they also produce power. So they're both the consumer and the supplier. Major suppliers to water utilities include water variety of companies engaged in construction, civil, you know, it's all over. Vertical integration, that's a huge thing because they can purchase their suppliers as part of their industry. Transmission, production, customer service, they can buy up and down that entire chain. And I don't know what Nextera does. You know, we want to get pretty quick that we're looking at your short list, so we can start doing company analysis, but you have to start with the industry.
Have they done Nextera like previously?
We've never looked at them.
Oh,
They've
okay.
never come up. Duke has come up. The only companies we had a water company in there. Something was a Canadian utility. But yeah, we haven't had.
I took a picture of it last week. It's just the ones that were on the top. Let me see which ones I have. Oh, OGE Energy Corp, PNM Resources, Pinnacle, National Fuel, and Consolidated Edison.
Yeah, you could do those, and then you know, bring in an Nextera in, even though the model might not like them. Just so you have a big company that kind of get into. Yeah, that would be fine. So when we come back from spring break, we really want to be company focused. So next week we can we can go through the Bloomberg analysis, but after we get back, we want to be looking very specific at the company. Well, you know, the thing we're gonna do with Bloomberg is very company focused too. All right, good. Why don't you go back to the library? Let's try Statista, because I think there's gonna be some stuff there. There you really can just type in utilities and see what comes up. Geography, which comes up to geography. Oh, you already got the United States. Yeah, you get the very first one. Yeah, 51 pages, I mean, but might be good. Renewable power generation from wind sources is finally achieved. Right, so do a search on EVs there and see how big it is. Space EV space. Done. Private vehicles.
Oh, there. Oh, no, it's
No,
for
there are
even.
EV, average, even. Well, I can't imagine that seems like it's gotta be a big thing, an index. This looks like a good report, doesn't it? This might be something you email to yourself. It looks pretty good.
Let me see.
Oh, most important issues, there you go, right there. But that's just saying climate change and important issues. It's not related to utilities. They're just showing one of the items on the list and it's related to utilities. Opportunities, they have opportunities, no. But, so there's the renewables in there, and they're calling out one place. Right?
Yeah.
Wow. Go back up to the top to see if they have an index. Companies, innovation. Yeah. Might not be that great of a report. See if you can find another one.
Let's see.
Based on market. Revenue largest gas, energy, electricity generation by, we'll try the electric generation by electric vehicle, electric utilities.
This one? Oh,
Yeah. That's fine. Boy, it's shrinking. I don't know what those units are, but it's actually come down. That's the reason. That COVID would have been positive. Any discussion down there, electric utilities in the United States. Down from overall electric utilities, been slowly increasing over the past decade. Imports of electricity from Mexico and Canada have increased. As the domestic has decreased. The United States has long imported larger quantities. Wow, I didn't know that. Oh, okay, so imports exports is a big issue. Electric imports to California are driving higher imports overall due to the state's high consumption. California has one of the lowest in-state supply of electricity. Gas, PG&E, and another one's being sued for fires. Using fire, the largest bankruptcy of any utility in the United States after facing lawsuits for deadly wildfires. Yeah, I mean it's. Well, I had no idea that the production is down because of Mexico's growing. I don't know what kind of energy Mexico produces. But it's coal.
the only thing I would imagine, but I know it's just on like the California side, is like they have a lot of the wind turbines on that side.
Yeah. It may only be like 2-3%, but that's the other thing, you know, in Statista, try renewable, that's your search. There you go, right there, try that one, that third. Up from 6-7% 20 years ago. And it's really jumped just this last year. Okay. Go back because, the other thing we're interested in is the cost of renewable versus traditional.
Let me see, take it, the US,
You
oh
might
yeah.
try the word renewable cost. Let's see. So, less cost of energy, levelized cost of energy by, so try that third one. Yeah, I went up from there. Lower rooftop residential, lowest and high estimate. What's the cheapest? Then found utility scale, solar, I don't know what those things are. Wind is pretty cheap. Subsidized levelized cost in US dollars per megawatt hour. I'm surprised wind is cheaper. Where's this is only renewables then? Nuclear is in there, gas. I'm surprised wind is that much cheaper. So solar is cheap unless residents do it. If residents do it, it's pretty expensive. Utilities do it. It's one of the cheapest. That's an interesting chart right there.
Let's see.
That also gives us a good list of what are our companies producing. Which of those are they in? I don't know gas peaking versus gas combined cycle. Those terms stick out. Wind, it makes sense, but wind's only on there once. Solar is on there 4 times, 5 times. We'll have 3 asterisks. So
No.
discussion there. All right. Prices in the US, can you click on that one? It's probably not, yeah, it's a report, how many pages, 57.
PowerPoint. Can you see it or no?
No, what's the one that's, it says study ID 150301, is it the one we had before? Every top.
Oh yeah, that was the one we saw.
Okay. Oh, is that it?
No.
Okay. That's the one before, okay.
How can I share this one? No, yes, but I'm trying to see how to share it.
Oh,
Let me see. There it is. Can you see it?
yeah.
Okay.
Find the appendix, page 3. Price of house electricity prices. Say to 2035, that's interesting. We'll try going down there and see if they have a good breakout of those pages. What's that blue thing here? Price index of energy worldwide. You dropped off in 2020, probably because gasoline prices or oil prices dropped. All right, what's the next one? Section charts. You can dump all this into Excel. So electricity prices in US dollars per kilowatt hour. So Germany is the most expensive. Going down, there's some interesting, this one looks a lot better than the others before. Energy consumption worldwide and what is an exajoule? I don't know what that means. Capital costs, okay, that's very similar to what we saw before. That may be the exact same thing we saw before.
Oh, yeah, that one looks the same.
Coal has been coming down. Now they expect to go back up. Boy, these are good charts. I'd save this one somewhere.
Let me see.
Some natural gas, that's been coming down, but natural prices have shot up here recently. How much the Texas issue impacted? So wind power prices, wow, wind is really coming down. Or I don't know what these words mean, though. That's the thing. Is multi-module price, whatever in the world that is, but solar prices look like they're coming down. Biomass feedstocks, I don't know what those mean. The price in US dollar per ton. I don't know if they can equate that. Electricity prices have been pretty stable the last 7 years. What that means, I don't know what we pay in San Antonio. So, but again, it looks like prices are coming down. Winter's really prices shoot. Average retail pretty flat the last 7 years. These aren't inflation adjusted. I think a lot of reasons the 70 rose so much is because of inflation. I don't know why it jumped so much in 2005 though. I don't know what happened in 5 to 10, but I think 70 to 85 is probably because of the inflation, and then it was flat for some years, and then suddenly after the financial crisis and the dot-com crisis. Interesting. Okay, I don't know any of this stuff, so everything you're showing me is brand new. Goes up more than commercial. By state.
It says, oh, is it here? Okay.
I don't know if you wanted into a slideshow, if it would.
Oh, okay. Maybe.
Slide, click on
Oh, it cuts off at the same point.
No, but I mean, if you click on Excel.
Oh, that's what I wanted to see, but
It doesn't seem like that. It's just double click. If you double click.
but it's like a little picture. It's just, oh, there it is. I think it's moving. There we go. Let me, hold on.
You're gonna have to. All right, so this is more just knowing that this stuff is out there. Statista, market line. So next week, if you have time to watch the Bloomberg market concepts, we'll do that next week. If not, we'll actually do it in there and go through it. I would have gone through it 2 or 3 times, so I'll be pretty good at it by the time for class. All right, thanks. Good. Interesting stuff.
Let me just see where this file saved. 'Cause that PowerPoint, like where it got saved.
Yeah, I'll say that.
Oh, okay.
And then,
So I tried to pull up communication services in Statista, but
yeah, you're not gonna,
it's not really,
It's not that not right. So you have to do things like social media,
okay.
telecom. Social media is probably you can have millions of things in there.
What is the, like, Disney Plus and like, that's not social media.
It's online streaming.
Oh, yeah.
The word streaming might be there.
Okay,
Yeah, you have to get on your industry like her with Triana is in utilities, typing utilities, all kinds of stuff come up. You can't.
interesting. Yeah, it's kind of like 3 things.
Yeah, social media usage in the United States. So I was telling you, Triana, your goal, it all comes down to growth. Where's the growth of this industry? So we start off with the industry. Is the industry growing or not? What's the evidence for that? And then you get the company specific. So if your industry is not growing fast, maybe your company is growing fast because they're in a good part of the industry or vice versa. The industry is growing fast, but this is a dead company.
Isn't there also some value in the communication sector though as well? It's not all growth. Like you have like AT&T and other companies.
But it's still, but as a value growth company, you're still focused on how much growth is there.
Okay.
So you may be in an industry that's all value stocks. But where is the growth? Is the growth demographics? Is it overseas? Like we're talking utilities, maybe it's the growth in EVs. So they're gonna be selling more electricity to power cars. It's those kind of things. What's a big industry here? So forms those kind of things. And you get like these reports that can be interesting. And then you also get graphs. And so if you go back to the previous page.
It's the same page I duplicated it.
Your back page.
Oh, you mean the search?
So you can see some of them are reports and some of them are graphics. So look at the first blue one down there.
This one?
Yeah, social media activities in the US. Just see what they give you. Comments on posts. Yeah, that's kind of a detail might not be useful to you. All the companies, your company, but
Okay.
so that's the downside of Statista is you're just looking at 20 things to find one that might be useful to you. I don't know what the red means. The blue, you get a graph. The orange, you have something you have to download and read.
Seems to be just a collection of a lot of the
That first one
blues.
was interesting. Worldwide digital population. 4.7 billion. Active mobile, active social media, active mobile social media users. It's almost the same.
Okay.
Everybody that's on social media also has a smartphone. That kind of
Yeah.
makes sense.
Besides the people that have a flip phone, essentially.
There's probably a few grandmothers and grandfathers out there. Everything's on a desktop. I bet there's a bunch that are 100% mobile and don't have a desktop. But yeah, this is the kind of thing you're looking for. If we do the sector wars, these are the kind of charts you want to pull and put into your introductory section. What you're trying to do is make the growth story.
Explain the sector wars, because I've only heard of it, but I don't know what it
We're
is.
do it because we're not getting enough students participating. But essentially, we just come in and make a pitch for a company you want to buy.
Okay.
And then we have a panel of judges that they pick which presentation they felt was the strongest. So right now we're starting industry level, and then we want to real quickly, especially right after spring break, and maybe even before, start talking specific companies and doing the research there. So we'll see. This semester is 7-10.
So Statista, it's like, I see what it is, but like, what do people use it for? And like, is it just to look at stuff like this, or is it more like, can you get data from it?
Oh, yeah, like if you click back on, go back up to the top there. One of those charts, go down to the charts. Down at the
All
bottom.
right.
Things as a chart. And so you can look on the right, you can put that into Excel.
Okay. Well, that's a PDF. There's Excel. Okay.
And so you got the data, you don't have to recreate the charts.
Does this, is it a free thing or is it, if I'm part of like UTSA, it'll give it to me free?
I think you can go to it directly for free too.
Okay.
Just latisa.com. I don't think you have to go to UTSA.
Interesting.
I mean, it does say my account at the top, but I've never spent money.
I'm surprised I hadn't heard of it already, but I guess
You will eventually, because a lot of students use it. I think, partly is it's not well organized, so you're kind of just hunting through a bunch of stuff. But it may be just I haven't experimented enough with it.
I'm surprised TikTok's not on this.
Maybe eventually
This is 2020.
may not be a US. That would make sense that they would be on there.
Interesting.
Again, always, it's something I always tell my student analysis, it's always about growth. Where's the growth coming from? Is there any there? Think of this as a high growth industry, but then Facebook has what, 4 or 5 billion users running out of people. It's interesting, more people use Facebook than YouTube. That's kind of interesting. Probably more YouTube than Facebook. I've never used WhatsApp. I do use Facebook Messenger. I've never used Instagram. I've got a Twitter account, but I've never used Snapchat. So I'm old school.
I use everything but WhatsApp.
And so that's the piece that you're just looking for industry stuff. You're not going to find really good company stuff.
Okay.
Industry stuff.
So
But if you recommended Facebook, that would be a chart you can maybe use.
– 62% of people have a streaming service.
Wow. Yeah, I'm in that second group there. I'm in the 10%.
Okay, you don't have any more. You just-
I subscribe to Hulu or Netflix occasionally if there's something I want to watch. They both make it so easy to cancel that I just cancel. Subscribe to that's the same thing, but just age.
Yeah. So there's
yeah,
your
a lot of people, but there's some 18-year-olds that haven't subscribed.
Now, is that because they don't actually have it or their parents haven't subscribed or are they like stealing from someone else? Because I know I borrow my brother's Disney Plus.
Yeah, there's always some of that, especially Netflix. Yeah. No, it depends on how they worded the survey, right?
You'd have to go and look and.
Surveyed by Morning Consult, the Hollywood Reporters. So, yeah, he knows how that survey is. TV, video, and film, leading U.S. video streaming services.
Okay, so YouTube. Well, yeah, I think this is supposed to be more like, I guess if YouTube's on here, then TikTok should be on there, but I don't know what that one is. But you got Netflix, Hulu, Amazon
I've used
Prime.
Vimeo. It's actually, I've used it in my classes sometimes. It has stuff that I can't find anywhere else. It was free when I used it, but I don't know if they probably overpaid. I've used all of those, but Amazon Prime. I've never used Amazon Prime. I don't know if Amazon Prime Video is part of my Amazon Prime.
Yes, it is.
It is.
Yeah, you have it. It's
I
just,
just never used it. Is there anything good to watch there?
there's some good stuff. They make their own stuff. So,
Kind of like YouTube.
yeah, kind of like Netflix and YouTube.
Netflix. Yeah, and YouTube just,
And
have
then
us working for them for free.
you should have, well, it's not on there right now, but HBO Max and Discovery are combining soon. So they should probably be on this list at some point, I would
Yeah.
assume. I don't know how big
Disney's
these
not
two
on
are.
here either, so.
Oh, yeah. Well, this was 2019. I don't even know
Yeah.
if Disney Plus was in streaming.
Maybe not yet.
Yeah, I can't remember.
What's the question?
When was Disney Plus started? Because we're looking at a chart from
Thinking-
2019.
2019 or 2020,
Yeah, I think the end of 2019.
was when it was announced. It was November of 2019, I'm pretty sure.
Yeah, I like that.
Yeah, it was November, yep.
Yep, November. So it wasn't even created at that time.
Well, and then they, want better to start a new streaming service right before COVID.
Yeah.
It's like,
I think Disney Plus is probably in that list now.
oh, yeah,
It surpassed Star Wars, Marvel, I mean, it's the most popular streaming service now, I think, besides Netflix, really.
I think,
I bet there's lots of people locked down in COVID that watched every Star Wars movie.
Oh, yeah. Just because Disney Plus is like such a niche platform, because if you want any Disney movie, any Marvel movie, any Star Wars, they're only on that platform.
interesting.
Especially now with like shows like The Mandalorian, those ones, it's become super.
From a growth standpoint is,
Yeah,
everybody's trying to figure out
if they're
how
gonna
much of
stay.
COVID is permanent versus one-time thing.
Streaming service are really, I don't think it's gonna get cut back just because everyone's cutting cable, because it's, it's cheaper now.
Yeah, they probably have some statistic charts on the switch out of cable.
Yeah, for sure. I like myself,
You can even just talk to word cable and see what.
cutting cable, we're paying around $200 less a month now.
I've never had cable. Well, I think for like 6 months. I did. Revenue of US cable and pay TV providers, that would be interesting. See that going down much.
Oh, yeah.
That's a pretty good drop in 2019.
But it says other subscription programming. Does that also include cable?
Maybe pay-per-view or something. TV providers. So it definitely dropped in 2019. It was slowing growth.
Yeah.
There was a good podcast I was listening to. They were saying, cable has its reputation for shrinking, but that they don't think it's going to shrink as much. People say that actually be a pretty decent investment play. That's since we're doing statistics, you just kind of click and try to find things.
Forbes says in 2021, the cable network average audience is just 233,000, a decline of over 90%.
That sounds. I know a bunch of senior citizens that have cable.
Yeah, really, the only people I know that have cable now are senior citizens. Most people,
Or people who want ESPN.
yeah, like I know like younger age people.
If ESPN starts streaming, if you can get sports, and you can more and more.
I think ESPN has
Yeah, they have something.
they're hooked up with Disney.
ESPN Plus. So like you can like a package deal where you get Hulu, Disney Plus, and ESPN Plus all for like $100 a month.
If I could watch college football online, yeah, the numbers are pretty, well, I don't have cable, but
We have the
and I love ESPN when they do like the 1983 game between Alabama and.
Right, yeah.
That's cool stuff to watch.
like we have the Hulu Live Sports package, so it's like you can watch any sport, not like every, but like what's shown here. So it's like my cable would show like 2 NFL games a day. So the Hulu Live Sports shows the 2 games that's shown in my area.
Why is 5G download speed in Saudi Arabia so fast compared to everywhere else? I don't know.
So bad in the US. Yeah, so, that's what we're after. It gets a little overwhelming.
Yeah,
You gotta figure out the story. So we're talking about that with utilities, you know, you're talking EVs, you're talking alternatives. So the same thing here, it's streaming, the dying cable, global, bandwidth is an important one, 5G is probably a big issue. So you try to figure out those major issues, and then your theme with the companies is around those issues. We think 5G is going to be critical going forward, and this company is really tapping in on that environment. Our streaming is going to be the key. Theater going is going to keep dropping even after COVID. Who are the major streamers? What's their economic moats? Those kind of things. You just have to have an industry story when you talk to your company.
Okay.
So market line for your industry, you're probably going to be a little specific.
Market line?
Well, I mean, in the UTSA library. You can get back to UTSA's library.
What's UTSA's library? Like
Well,
the actual?
Yeah, the UTSA library. Yeah, go into. Right there, go into it.
All right.
Right in the search.
Here or somewhere else?
Research guides, go down to there. Not the way I normally get into it. Type in the search, type industry research. Tasha set this up from our screen analysis class, and it's really good. Research.
It'll fix itself. No, it won't.
No, that's just go to utsa.com and then type utsa.com. .edu, I'm sorry. Let's go into there and click on there, search.
Market
If
line?
you go down a little bit, you'll see Natasha's picture. She's a really, really good librarian, very helpful. So if you ever really just can't figure out where to get something, she's not a bad person to email and say, hey, I got this. If you can generalize it more, I'm in a class where the students in the class could really benefit if we could find this, you know, instead of being so personal.
Mm-hmm.
She loves to help. You know, we're spending a fortune on this stuff. She wants us using it. We're not using it, so she likes that kind of thing.
Okay.
Yeah, so
So,
market line, Ibis World, Virginal line, there's a lot of really, really helpful. I'm taking Anthony's Capital IQ class, and boy, it's a great resource. It's pretty amazing.
you said it's like Bloomberg, but more.
Well, we're getting to that point. Yeah, it's got some stuff we really have to tap into it. Market line's a good one. On market line, you can type, type streaming and see what you get. See if anything comes up. And then on the side, on geography, over to the side and geography to North America.
Broadcasting
You got
and
online
cable.
streaming, music streaming, click on that one. Music streaming. Broadcasting cable, you know, got some different reports right there. Well, market line gives you good definitions of industries, gives you good statistics, and it does a Porter's analysis. I don't know if you've done Porter analysis before.
Orders analysis. You mean, is that the five?
Five forces.
Yeah.
They do a very detailed Porter's analysis. You can see over on the left, you can put it out as a Word or PDF if you want to.
Okay.
So there's a lot of good stuff in here. I was kind of shocked when we're looking at Triana's. They didn't have some issues I thought would have been important for utilities. They didn't mention electronic vehicles hardly at all. Going down until you get past all the verbiage, and you can start seeing charts. It's right at the bottom. There you go. Streaming. So it's still
Like
growing really fast.
Your growth is slowing.
Yeah, it's a decline, but still 10% growth is pretty high, but it's, you know, it's getting saturated there. That's an interesting. chart.
What's your line here?
That's the growth rate.
Oh, yeah.
Mark, subscription, ad-supported streaming. I don't know if Pandora still ad-supported streaming.
Think so?
I haven't used Pandora in so long, so I'm like, it was when I got it, and it was kind of irritating in commercials every. Probably, boy, the rest of the world is 81%, but where's the US? Isn't the US broken out there? United States online music streaming market geography segment. I don't understand that chart.
Does it mean like? I don't know.
Oh, where our stuff's going?
Yeah, that's what I was thinking. I don't know.
But it excludes our stuff going to us, I guess. I don't know.
Well, is it German? Yeah, I guess so.
And why they pick those three companies? I don't know. Countries. All
I
right.
think they're the biggest. So like
Yeah.
of the US music, Germany gets the most out of any other country.
Yes. Yeah,
That's very strange.
China or India. There's the forecast. You can see the forecast keeps coming down. Well, they haven't jumping back up in 2021 for some reason. That's why. Somebody's, and then you get the, and I don't like the way they do this. They have weak and strong, but weak is good for your industry. Strong is bad for your industry. So I guess you got to think about a strong. A strong force is bad. A weak force. But
Okay.
when I do my experience class, I don't.
It would
use
be the
strong,
other
weak.
way?
I use the terms positive for industry, negative for industry. So it's much clearer. But yeah, strong is bad, weak is good. And then they go into that in too much detail. So I tell students on that one, that's just way too many categories, but you might look at one or two that might be of particular interest. But you can see below, they talk through it, they give you some ideas. You know, how important is brand loyalty? Suppliers, suppliers is probably mainly the singers and Sunny Music, Universal. There's some really good podcasts out there on exactly how the streaming industry works.
It's talking about like the what are those? The record people you sign with, not so much the people. Looks like it.
Yeah, so
The artists.
right?
Well, this looks like, I think it's changing though, because artists are getting a little bit more and more power. If you think of like Taylor Swift and them.
Yeah, kind of going into NFTs is kind of changing it.
Oh yeah, I forgot that's coming out too. It's a very vertical.
So you have to kind of read these backwards again. When it's outside, that's bad for the industry, but the way they word it, yeah, it's just, I find this really confusing the way they do it. Low cost switching, that's bad for the industry. And they show that as very strong. What they mean by very strong is not that
You can switch to
low-cost
Spotify
switching is
or
low.
to.
I mean, it's very easy to switch from one provider to the other. So that's strong. That's a strong force, which is bad for the industry. I'm not the only one who thinks that's just.
Market growth is bad? What would that entail?
Market growth, I don't know what market thing, you might have to look down and see what they mean by that. They may not actually even specifically talk about that. Yeah, strong market growth you would think would be good.
Yeah,
Yeah, I don't understand that.
unless it means weak market growth is strong competitive force.
Substitution, substitutes, you have to really think exactly what they mean by substitutes. They're not thinking that there's a substitute for music, but there's a substitute to streaming music, which is records and, whatever.
Live music, I guess.
Live music. But anyway, now quarters is just the 5 forces, what they're doing is taking each
They're
force
breaking
and going
each force
much more
down.
detail, which is probably overkill, I think. Degree of robbery.
Interesting. You'd think number of players would be low. I can only think of like Pandora, Spotify and Apple.
Yeah, they should actually in here have competitors. They had some discussion under degree of rivalry. Is this degree of rivalry? They had it somewhere, maybe it was suppliers, I can't remember, there was a place. You could probably just search on Spotify. There they see right there, Spotify, Tidal, Apple Music, YouTube, Pandora, SoundCloud are all affluent services largely dependent upon the market. Players are relying on the market share to survive. Exactly what they mean by that. Buyers are able to switch between these players for low cost subscriptions usually purchased on a monthly basis. That's why Netflix is such a high rate.
Okay, so we're doing the research and then the next step would be to break out the model and then,
Well, you want to get your true buy list of companies you want to do more research on.
and then you would research about.
Yeah, then you get into the companies, but you need to have at least a list of your major themes for the industry.
Okay,
So what I'm looking for here is what, maybe 4 to 6 things that you think are really key for this industry. So that when you get to the company level, you can somewhat associate it back to those issues in the industry. The firm has some unique advantage or whatever. So here you're trying to figure out, what are the biggest things in the Porter's 5 forces? And it's like Porter's 5 forces is a good way to think through that. You can't have the top 25 issues for an industry. It's just too many. You want more than 1 or 2, 3, 4, might be about right, or 5, but you don't want more than 6. So you're just kind of skimming through stuff like this, looking for the biggest things.
okay. Now, when you say industry, do you mean it's like just part of the
Yeah, you've got
sector?
an industry that's really several industries.
Yeah, it's like 3 or 4.
And then there's starting to overlap, AT&T is starting to do stuff. You've got cable companies that are starting to do, so there's a lot of vertical integration going on here as well. In fact, I wonder if you did a search on the word vertical, they would talk about vertical integration.
I need to,
Yeah, within that market line report,
oh, so go back.
yeah. With any of these, even the broadcasting and cable TV,
Yeah,
or that might be more there.
too far.
Yeah, try that one. I was listening to a podcast, which company was it? One of the big, they own a lot. It was really interesting podcast.
Want me to actually search for the word?
Yeah. Do Control F. And type the word vertical. Advertising. Right, integration. ER or EG.
Yeah.
Oh, there it is right there, vertical integration, right? Integrate into the domain of suppliers and vice versa. So that's it, but they don't use that term. It's only in there twice. So.
Yeah, what was the other one? If I can.
Integrated teach, that's something different. So.
Okay, it's talking
So
about
we-
like Netflix making its own thing.
Oh yeah, to save them money on the licensing.
So
The
just make
podcast
their
I
own
listened
movie.
to today was really good. It was related to Peloton. It's saying how Peloton, the bike people, is actually thinking about getting into their own music production, so they don't have to pay all those licensing fees, and hiring their own singers, and so that's a big part. You got to pay all these licensing fees. You can do it yourself. It costs you money to do it yourself, but it's a lot cheaper. So that's kind of a Netflix model as well.
Something just happened to Peloton. Did they stop making bikes for a second or something?
Well, they've been in serious trouble recently. You should listen to that podcast, it was really good. It's on business breakdowns. You listen to business breakdowns?
I should probably, but
Yeah, it's really, really good. They have several really, really good podcasts. I think they're exceptional. I think every undergraduate student should listen to that stuff all the time. Exactly what you're going to be doing in your career. It's just understanding how business works. Yeah, so you're going to limit yourself. So
So
maybe
a couple
more
things.
telecoms, maybe more cable. When you focus on streaming or something, you know, find one niche you really want to get into, and find, you know, start with 3 or 4 companies and try to get it down to one you really want to have a buy recommendation on, and you can focus your time on that.
okay.
And so once you figure out what that is, you can get the industry story first and then tie that company into the industry story.
It could be interesting because then you'd have to be looking at like, because almost all of the streaming companies are not just streaming companies unless you buy Netflix.
Yeah, Netflix might be Apple, and
If you want to buy AT&T, eventually it's going to spin off and you'll get part of the streaming company and then you'll have part of AT&T.
yeah, and AT&T, the telecom side's so radically different from what we're talking about here. Tough because you got this is a tough industry. The reason I mentioned business breakdown is they do a lot of heavy lifting for you. So if one of your companies is in their podcast, you might start there because they usually do more exciting companies, more interesting companies. Might listen to that podcast, and in that podcast, you might not like the company for the podcast, but you might hear some competitors that bring up some interesting ideas. So it's what you're trying to do is get a really good presentation, and you might kind of have to fall into it. Instead of trying to go through 50 companies and getting down to 1 or 2, you might have to start with 3 and try to find one you think you can make a strong case for it, and then just go for it.
Okay.
See the resources here, UTSA library, there's a lot of stuff here. That
To
is
look
free.
through
This would
and-
cost you a fortune if you want a student. So you might as well.
The market line?
Market line, Ibis World, Statista, I think is already free. Some of these stuff, Merchant Online, even Capital IQ and Bloomberg, they have research reports. If you go on Capital IQ and find a company and then click on the research reports, you'll get, you know, the sell side research, which is even better. Doing exactly what you're doing, but they've already done all the work. And if they were doing it for 50 hours a week for several weeks. So, you know, if you go back to the library,
Yeah.
Ibis World's interesting, Merchant Online can be interesting. Go down below, they'll show you.
What it is.
So like analyst reports, that can be really, really powerful when you get to the company level, but probably not at the industry level. I don't know that second group, ABI and Business Source, I don't use those. The 3 ratios and all that, I doubt you're getting anything there. You're not going to get from the other sources. So really, those first 4 are probably the biggest ones. The net advantage is probably really quite helpful. I just haven't gotten into it. Anything S&P, you know, they're the ones that do the Capital IQ. So that's, you know, they have so much data and so much research that's a good source.
Okay, so the IBS World and the Net Advantage have,
All those
Stats.
first 4 are the ones that you see the most. It's like it's just a bunch of articles. You can read those articles.
okay.
Did you find the Bloomberg market concepts?
The video you made?
Yeah. You can get through that to the UTSA library as well. You have to go through the UTSA library. No, not that.
Oh,
those
no.
videos. I'm talking
You mean-
about, Bloomberg market concepts. You found that yet?
No, but
Go back up to databases. On the Bloomberg market concepts. Market concepts,
Bloomberg.
yeah.
Right.
There you go. Yeah, click on that. And you set up an account. You have to use your UTSA.edu account. Don't use mine. I think you have to sign up though first.
Okay.
You have an account. You sign up, get your account. Once you get your account, you can get to it outside of UTSA library. That's not always true. Like
So the market concepts for Bloomberg,
Bloomberg Market Concepts, BMC. And when you get into it, there's a section called Equities. When you click on that, you'll see an example they do for Rolls-Royce. And we essentially want to do what they're doing for Rolls-Royce, but do for the company you're researching.
okay,
So you just watch that and you just do the exact same thing. That's the starting point. After that, it's just, it's just writing your report. So after spring break, you pick a company. I'm going with this company. I'm going to recommend this company, and we'll talk about what components go into that. That's the rest of the semester is getting down to the very specific. We start the industry, and we're going to get down to specific stars.
Hayden, what do you think? Like, what do you think we should be focusing on, like in terms of like what part of the sector? So we have like streaming, we have.
I like streaming a lot. It's such a big thing in today's era, and it's just going to get even bigger.
We have that, we have like social media stuff going on, and then like 5G. Is there more?
Yeah, and 5G might be more of another industry that heavily impacts your industry. I don't know if your industry actually produces. Actually, the producers of it, but
They're the users of it.
It's kind of a supplier. They're kind of critical to your industry working. Yeah, you can't just limit yourself to one thing because you can't do everything in a limited semester. I mean, you're trying to do something 45 minutes a week that, in reality, people are spending 50, 60 hours a week. So you just got to cut down what you
Pick something. I like streaming. Okay.
If you want to just pick a company, we can go with it, or pick 2 or 3 just in case one of them doesn't work out. And say we pick these 3 companies, we're gonna recommend one of these 3 companies, and then just go for it. That would not be a bad strategy for the rest of the semester.
Should we
And then we can
try
say-
and focus on a only streaming company and not on one of those mega companies that own including streaming?
Well, it's up to you. Obviously, if you do Apple, you got to firm into streaming, but also there's hardware and also the software. So there's essentially 3 industries. Apple's not going to show up on yours because they're not in your industry. They're selling in another industry. So I would stick with ones that are actually on your list. Look through on the streaming. Spotify would be the obvious one there. I don't know, Pandora. Or I doubt you would recommend Pandora anyway.
Is it Roku? Are they streaming or are they just the?
Roku's just the hardware. They don't have like their own actual streaming.
So it probably wouldn't be on your.
It's on the list, but I guess it's.
Subscription.
Yeah, huh. I assume since it was on the list, they had like an actual subscription thing.
Well, I don't know how Russell classifies or how GICS classifies them. There are times where it's like, I'm not sure this belongs in this industry. It's not always obvious where do you put Apple, where do you put Disney. Disney does cruise lines and does theme parks, but they're in your list of communication services because that's such a big part of what they do.
Only
The
reason,
platform companies, that's all about advertising.
yeah, the only reason I thought about Roku was because of like it's a Kathy Woodstock, so she must see something in it, but I don't see it. I don't get Roku, but
Yeah, to me, streaming is subscription.
this is not subscription.
And social media is all about advertising. So which of those interests you more? The advertising side, it's all about how many users they have. Disney, Hulu, none of it can do Hulu.
Hulu,
It's not publicly traded.
who owns Hulu? Disney owns Hulu.
Well,
So
it's been spun off, I think, but Netflix, Amazon, Disney, Viacom. Well, see, even Viacom, you got some firms you wouldn't think of that have that at inside HBO.
Hulu is still majority owned.
Who owns the rest of it? Is it publicly traded?
NBC.
So it's not publicly traded, so you can't actually buy it.
Yeah, I mean, you could buy Disney and have both Disney Plus and Hulu, but then you'd have to explain why the rest of Disney is also a good purchase,
Yeah,
right?
yeah, Disney's complicated. Disney's kind of a conglomerate. Yeah, your best bet is a Spotify. You might check business breakdowns, because if you can find, I think you're gonna find a company on business breakdowns that's gonna really open up your eyes, not just to your company, but how to explain the whole industry.
Okay,
I can't remember what they have there, but
it's,
they may have done Spotify in the past. I just can't remember. Today's was really excellent. I don't know anything about Peloton, but after listening today, I could probably fake my way into a Peloton expert. Just mimicking some of the stuff I can say today.
they've had a rough time.
Bad YouTube, not as bad as Facebook, certainly.
Well, if you have any,
That's comparable, isn't it? Facebook fall.
if you have any bad news in today's market, it doesn't go very well for you.
Tech, yeah. Well, they're priced to perfection, and
Yeah, it's no longer perfect.
find non-perfect information. All right,
34 PE ratio isn't that high for a tech company, isn't it?
34 is still a little elevated. Facebook's at 15 right now.
Yeah,
Yeah, 34 is still a little bit. It's not, Amazon's getting back down to that level. So it's, it used to be last year, it used to be 34, 45, 50 was kind of normal, but we're starting to see them getting down closer to 20.
I wish it had like how high it was at the 52-week high.
Oh, you can pull that from Bloomberg. Yeah.
Oh, yeah.
All right, good. I gotta take a quick break.
Okay.
You'll see where we're going here, right?
Yeah, I'll listen to some of those business breakdowns.
Business breakdowns is on the Colossus network. And you can just look at the whole list of all the companies and see what stands out.
Is that like, could I get that off of like just podcasts? It is a podcast.
It's on my Apple phone podcast.
Yeah.
You can do it on your desktop. Yeah, just type in business breakdowns in your apps and it should come up. It's a free.
Okay, I'll do some of those and see if I can find something. We can have some semblance of direction.
Yeah, just second words you can just. I don't know if we like this company or not, but we got a lot from this. This is, it's not that hard to pick a company and build a case for it. Kind of backwards, right? We're supposed to do the research first, and then if you like it, you can build a case. It's not bad practice, kind of streamline a little bit.
I mean, I like Disney stock. I think the opening may